Hello my friends, my name is Rocky Outcrop and this is some smooth technical analysis with perfectly working technical computer stuff on the go as well. No technical issues here, just pure unadulterated technical analysis. Thank you so much for joining me. We're going to be taking a look at Bitcoin, Ethereum, Chainlink and Tezos in this video, and hopefully there's good audio, right? And hopefully nice smooth streamings. So let me know if that fixed it all for us as I run the intro clip. Now what's going to happen is I'm going to come back, I'm going to do some Bitcoin technical analysis, nice and lovely and easy for everybody, good stuff, easy to understand and digest. Then I'm going to go and do Ethereum, Chainlink and Tezos in that order, and I'll be checking in with the chat just briefly between each one, and I'll give everybody an idea in the description after publishing the video where you can find all the different timestamps, what just so you can skip to the bit you want to watch, or indeed just watch the whole thing if you enjoy that. If you are watching this now, that means that you quite like the stuff that we've got on the go, and that'd be quality if you hit that like button. I know it's asking a lot after the last stream had those technical issues. And then secondly, if you think that that was a good, enjoyable stream, then be sure to hit that subscribe button, because it would help the channel, and it helps you because you get to know when we're live again. Well, with that out of the way, let's run the intro clip and come back and see you in a second. Hello again, my friends. So what is that weirdo chart that the Rocky's got up behind him at the minute? That is the Bitcoin USD chart on the CMEs. What was that? Was that some noise? Was that just, that's just the noise I'm hearing of this particular stream. Oh my goodness, all over the place today. Right, cool. So this is this odd looking chart here is the CME charts, and there's some interesting things about it, and we'll talk about those in this video, and we'll talk about the spot prices. In fact, 90% of the Bitcoin technical analysis we do will be on the spot charts. So let me just dive on over there and get that back up. It's good to see that the chat is letting me know that things are working a lot better right now, so that is good. Reports say it's happening across the board with all streamers. Patience and we will prevail. That's quality, that there's been a bit of issues around the world right now. Let me know I'm not so alone. Right, cool. So this is the CME charts, and what does this big wick mean? Well, it means that there was a gap here as created between the 2020 close and the 2021 open here, and it opened up at 33,415, having closed all the way down here at 29,235, at the high of that day coming in at 29,650. so there was a gap all the way from 29,650 up towards the 33,500 area. So that's quite a big gap, nearly $4,000, and it's the biggest gap that's been on the CMEs as far as I'm aware since the CME started trading Bitcoin. And what did we do then today? Well, we actually went down and filled that in immediately, and that's obviously not ideal. It's obviously a fairly bearish response compared to the previous two gaps we've had here, which were breakaway gaps, not having been filled in, and over here a breakaway gap having not been filled in. The last one that did get filled in got filled in over there on the 8th of December. It was created around about the 29th of November, and that then it took the guts of that week to get it filled in. It took a week to get it filled in, and then afterwards we were able to move towards the top side, put in another gap along the way, and then choosing not to fill that one in. And what I'm seeing here is, this was kind of bullish and we saw this big follow through thereafter. This was bullish and we saw big follow through thereafter. This is less bullish, overall, and it just puts things into a bit of perspective. Now, there's two sides to this coin, and one of them is, well, we filled it and that's great. We don't need to think about anything for quite a while. Let's just go on up towards the top side. It's all gravy. There's that side of thing. Fair enough. And you would make arguments for that based off the back of things like this rejection that's been seen there. Now, of course, the long shadow on this candle does also mean that it's a long shadow candle, and that is, spells further downside, yada yada. But we do, and it's not exactly bullish looking, but there was a big rejection by the bulls, if you like, as well. We just wanted to fill it in and then run thereafter. Some big fish perhaps controlling the markets at that point, or something along those lines. So those are kind of your two sides to that coin. But let's look at how that looks on the regular spot charts. And if we draw in a Fibonacci retracement, it's drawn in from the lows over here on the 18th of December, the 21st of December, sorry, down there at 21,800, up towards our most recent highs in here at 34,781. Then we see that there has been, of course, a pullback down past the 236 that took out the 382 and the 50% area here on that move. And then, of course, as well, you know, the 382 is lining up with that 8-period exponential here on the 24-hour time frame, and saying that we're, you know, of course, above that. We've had a retest of it. Everything's kind of looking okay with that regard. We've also, you know, moved up, done the full measure move off that triangle in the background there. So I'm going to take off this negative stick. I'll leave this positive one on there just for like historical purposes for now. But we've done that. So what we're looking to see then is, will this manage to recover? So if the prices do recover above 32,000 region, open a few 4-hour candles and whatnot up above there, then things start to look quite positive again, having had this as being a rejection. If we start to take out these areas over the next day or two, then that obviously not so great, and further continuation towards the downside really means that, well, instead of the gap chat and everything else, what we're looking at is the fact that we're below the 236 here, and there's, you know, that to be aware of. If we bring up the oscillators, then how did we arrive at this position though? And this is another distinction from previous times, and I've done videos in the past several times about how you tell when a top is in the market, etc., etc. And one of the things that you would look to would be bearish divergence. Now, over the weekend, what we actually managed to see happen here is, of course, this big push up in prices, which then burnt off all the possibility of bearish divergence here on this last movement up the way, which is encapsulated by that Fibonacci retracement. So, you know, since we had those lows over there on the 21st of December, for instance, or indeed the high that preceded that low, and towards the top side, we've done it without divergence. There was the possibility here, a couple of instances here, as shown by this downward sloping green line, which we can now remove because, of course, we've moved up past that zone. Is that 100% right? Yeah, good. Thankfully, wasn't talking rubbish there. So, you know, that's not in place, and we'd kind of want to see some of that if we're looking for a pullback. Now, little caveat, I suppose, in that sense, is that we are, of course, in all-time high territory, and that can change the sort of your dynamic with divergence and whatnot anyway. So there's that side of things. I'm quite frustrated with all these lower levels that we had on the charts. I'm actually going to remove them here. Now, they do actually still remain the case in terms of if we do see breaks down past these points, what would we be looking to? And the big areas do start to come in at around about, you know, 26,800, where we had this series of lines in here, and that's shown by the Fibonacci retracement anyway. So I'm going to remove all of these here just to make it a little bit cleaner. And in fact, I'm just going to do using this this thing here. All of these guys don't need to be there. Right, excellent. Because if we did see a pullback, then we'd be looking to see the market conditions at that point. Now, we do know as well that there are plenty of areas to be aware of if we do see things coming down past this point, but we'll not get too we'll not get too caught up in the nitty-gritty of everything, so long as we're staying above the 50 simple period moving average here. We're down at that 22,000 area. Now, I know that that's a massive shock to the prices, but what this actually looks like now is what we're kind of got to the point where we are able to do what I was talking about a couple of weeks ago with regards to how are we going to get past all of this bearish divergence that we're seeing here as we're going towards the top side. What would need to happen if we wanted to come and have a 30% pullback in price? What key areas would we need to see us taken out towards the top side so that any subsequent pullback in price can still remain above those areas? And now we can see that we have come up towards that, towards this area near enough, let's just call it 35k for argument's sake. And if we were to drop down then towards that that horizontal line here, our last inflection point where the 618 is, you're looking at a 25% drop off in price. Now, if we did go the full way down towards where this low was previously, then you're looking at that 37% drop off in price. That number that you might have been kind of trying to see, where could this happen? When could this happen in the bull market and still continue to trend towards the top side? So let's just I've explained that quite a lot in the past, but I'm not sure how many people right now watching this particular video will be able to follow along with that in detail. So I'll just quickly dive up to the weekly time frame, hide all of these drawings off here, hide off the moving averages as well, actually, and stick the Bollinger Bands on, maybe to give you a little bit of context with regards to what we're looking at with these key areas. Now, 30,000 itself is where we find the edge of the Bollinger Band at the minute, and on the terms of the weekly time frame, you know, staying above that 30,000 area is going to be like what I was talking about in the daily time frame with regards to that 32,000 type notion overall. But looking back, you know, at times in the past when we've been in a big bull run, this particular chart doesn't have enough history on it, sorry. I'm going to go around the world for sport here, but there we have it. There's more history for us. So for instance, the 2017 bull run, and we saw these pullbacks happening. What did they look like? And that's these 30% areas, you know. And if I just pick one, for instance, this one over here, drag it down the way, that's 40%, you know, in terms, and still survivable towards the top side. And now we've managed to do enough, you know, where we could actually be looking at that being a possibility. Now, I'm not actually calling for that to happen right now. What we do on the channel is risk management, and that is a risk for us, which now, in terms of being able to continue towards the top side, doesn't have so many of the hallmarks of necessarily breaking down the way that it would have had we had a 37% pullback in the prices from an earlier point. Just choosing an arbitrary point in the prices, for example, in there, and seeing if we came down to this, then we're looking at 15,000, and that's not really a key area for us in terms of prices and whatever else, you know. And at various points along the way, we're getting that sort of thing. Instead, it was really, you know, at certain times we were looking down towards the 9,000-ish area. Didn't quite get it from the right area. So at this inflection point, in and around about our all-time highs, had we had the 37% pullback in prices, it might have taken us close enough to fill in that CME gap that we had previously on the charts, etc., or other types of ideas, you know, which might have made sense from a point of view of we're on the bull run, how are these pullbacks going to happen type of idea. There hasn't really been anything since then until now, and we've done that. Now we could actually go up towards 37,500, which would be an even better area for one of those, for it to be where the sort of that particular type of pullback can happen at, looking at the sort of the pullback between 37 and 23 as being potentially better than the idea that we were just kind of discussing there now of the pullback between 21 and 35, really, that sort of idea. But we're not seeing anything working for us in terms of the weekly with regards to pullbacks towards the median line of the Bollinger Band or anything else like that. So I don't want to see this be a break of a parabolic move which results in an 80% pullback. So if we were to see this at any given time, then I don't want to see us coming down past those points there, because then we could be looking down towards the likes of 5 grand again from this point, and that would make sense as well from the very, very macro picture. Final note in terms of broad perspective stuff, we do know this, we've talked about it quite a lot. So if we were to go down towards the 23, you know, if we were to go towards 37,000 and then pull back down to this area, that would make its own type of sense as well. But if we were to and that would be, you know, like the same story happening as what we were just talking about. But there is this area just in here at 25k. Now that's just kind of not the biggest deal. We do have some facets from historical price action over here kind of lining up with it to a degree, but not massively. The 24-hour time frame, that's where we have the median line of the Bollinger Band as well at that point, if we do go on down the way. But to come in here and touch off the monthly Bollinger Band here, you know, is going to require a lot. If we were to go up towards 37,000 and then come down here, we could wick down and touch it easier. However, if we were to not manage to take out that, you know, first off, recapture 32,000, start moving towards the top side, then this remains, or it is, or even begins to sink down the way even further, and you've got that little bit further to go to actually come in and test off the top end of the Bollinger Band. If you were to have a negative month and to have 2 red candles on the go, then that becomes even more prescient, I suppose, obviously. And then here is that 23 to 21,000 area, and that would line up with a wick. Now, why am I talking about it from that point of view? That's obviously scary sounding, but we've got this massive gap between us on the monthly, on the Bollinger Band, you know, so far, and this is just abnormal in terms of the price action. We're still on the Bitstamp charts. We've got enough of these monthly candles to go back and see, you know, that this just doesn't happen. Now, of course, in terms of Bitcoin, that's still a relatively nascent asset, having only gone back as far as 2013. Looking at that one, not going to find anything else really in the crypto world to make a comparison with. But if I jump over to Forex and take a look at something like the last 20-30 years of, say, Euro GBP, the biggest, not Euro GBP, let's go for Euro Dollar, because that's the biggest traded one in the world. And we're talking about the biggest trading crypto asset here, and try and find a single instance where we had a candle floating outside of the Bollinger Bands from a broad perspective on the monthly time frame in the history of this particular chart here. Don't know exactly how far back this one goes, and have we ever seen that happen, come back down and touch it? But has a month actually ever closed out? Because if we were to do nothing at all in terms of the prices right now and just live it through to the end of the month, that's the situation that we would find ourselves operating on. And just as a comparison point, you know, here back then in the 3rd of February 1997, this effect did happen, okay? And we saw it coming back up again. So we in terms of, you know, we didn't quite really touch the Bollinger Band, came up as high as 118, went down as low as 113. Then in the following month, we came up as high as 116, and then down again, you know, down towards 113. Wait, 112, you know, as a really low. This is almost 114, etc., etc. And it was all part of this downward movement here overall. So can we see something like this happen next month? Yes, we can. But I had to go back, you know, of course, to 1997 to find that, and that's long enough ago in terms of monthly candles. Now, could I do this experiment for a while? Yes, I could. All I'm trying to point out is the fact that this current position here of the prices is extremely bullish, so much so that we're now capable of doing a 30% pullback without affecting the price, and that is a risk in and of itself, just to be aware of for us in terms of, let me go back up to the most recent price action in terms of what we're looking at. Okay, so I just wanted to point that out. Start of January, I've been doing this, you know, this type of analysis at the start of months and whatever for the last few months, really, actually, I suppose, since the summertime. So we know where we stand with regards to this one now. So there'll be no surprises for anybody during the month if, you know, we do either or in terms of whatever else. So like, let's just then go back down the way towards the 4-hour time frame and check in with how these lows have really operated for us over the last chunk of time. And as you can see, we've come in here with higher lows. Now we are below the median line on the Bollinger Band. Of course, that's the 20-period simple moving average there. And looking back, the way was the last time we spent any significant amount of time below it, and did we get continuation, etc. Came down here, hit the lower end, and reversed towards the top side. This was, you know, kind of like a lower low, but actually it wasn't. And then we moved up the way, so we didn't do any structural breaks or anything else to go along with it. This trended down for a wee while here, so you've got that over there, kind of looking up the way again here and asking, whoa. But at the same time, of course, the range or the volatility looks huge. If I stick it on logarithmic just to kind of diminish that a wee bit, we're still talking about huge amounts of volatility and you know, potential risk. Of course, looking from that high down to that low, it's 20%, down to where the bodies are, you're talking over 10%. So there's these over 10% moves. Now it's time that we start talking about this as well as being volatility. I remember during many months in the past when we were having 10% moves and people saying, well, there's very little volatility in Bitcoin, and I was saying, what are you talking about? Through all of this period there was tons of it. For instance, just taking it from that low up towards that high, that's 10%. Now it took a couple of weeks for that to happen, but we had that, you know, and then within these chunks we had really big volatility running up to it as well. People get very quick to say that there's a lack of volatility in there, and while we were just kind of trending. So this is the kind of the point I want to make out here, is that we want to see a continued volatility in here to push us towards the top side, and not to be just trending towards the downside and for that to continue happening and us to ultimately sink down the way towards these lows and then latch on and start breaking things structurally. Here you've got this medium term sort of low, but we don't actually put in a lower low until we come down towards the 26,800 area in terms of operating, looking for support. What else do we want to talk about here at the top of the month? So, well, you know, this is looking okay. In terms of the Bollinger Bands, did we come up here and put in divergence? Well, it was divergent on the 4-hour, and then we got that pullback, so that makes a lot of sense there as well. What did the BTC 1 exclamation chart look like as well at that time? It managed to escape the divergence up there on those highs as a result of the gap. handily enough. Was it divergent on the run up to it? No, as well. It managed to escape the divergence because of, or has it? No, it hasn't. Okay, good. So if we were to see a big pullback, then we can see that we do know that we have got this divergence here on the as a result of this big candle, which is gap towards the downside. Then on the RSI we have got bearish divergence showing. Okay, so the situation really is in what, how do you take that assessment? What do you assess from what we've seen happen so far? Is it a massive bullish rejection of negative price action, or is it bearish in and of itself? Because if we don't take out 32,000 and sustain it, you know, for a while, then things look rather rubbishy. How are we doing in terms of this chart? It's open and everything else, and it's contangled, and it's contangled to quite a degree as well. 31,650 versus 30,877. So there's a massive contango on the go on the CME charts already, and it doesn't look great. You know, it doesn't look great. Coming down here and filling this in again and going down towards that area again, you know, seems totally reasonable. Coming down towards the median line of the Bollinger Band, 29,700, that seems reasonable. That would put you in at 28,700, I suppose, if that contangled nature remained. Let's call it, maybe it's just more like $600 or $500. I suppose there's a delay, so let's call it $500. So that would take you down to, still whatever. We're still talking about the same sort of thing, 29,000. You know, that would be possible, and that's a big discount for people who, you know, have been FOMOing into the market, I suppose. In that contrast, I mean, it's just like, so it's up to you. If we don't move towards the top side yet again, then inevitably that's what we're going to come in with, is divergence across the board, right? In terms of the CME charts, with the potential for negativity to span out from that afterwards, and of course then the situation that we left off with on Friday, where we're actually backwardized, by the way, on the CME charts, then we'd start to have that negativity built in yet again, which is kind of interesting. I'll be keeping my eyes at things like funding rates and whatever, just to keep an extra eye on the sort of sentiment in the market. Movements up past 32,000 speak for themselves in terms of this chart here. You know, it's what we need to see at the very least, you know, just to kind of put this in as a potential for a local low. We'd be coming up and taking those areas out. It doesn't look, you know, in terms of a chart where you zoom out like this, it's incredibly bullish, and it will be until you've taken out the market structure. Looking at least in terms of 3 target source downside with regards to how bullish are you if we hit them? What happens if we hit 28,500? Do you remain fully bullish? What happens if we hit 26,500? Do you remain fully bullish? What happens if we hit 24,500 or whatever? Do you remain fully bullish? Now, of course, as well, there's going to be certain cutoff points after that. 23, 21 are very, very bad. You know, from where we are now, it's extreme. So you'd be trading that on the way down. At what point would you change your attitude? Right now, if failure to take out 32,000, crap. On the other hand, very positive if we do. That's going to have to do, if I've overdone it, if I've overcooked it today. 23 minutes of Bitcoin technical analysis, 24 minutes to Bitcoin technical analysis really here. If it wasn't for that technical kind of hiccup in the previous live stream, then I think I probably would have got through that a bit smoother and whatever. So that's cool. Am I looking at something wrong? I see what contango. No, it's lol. That's good. We're just having a bit of a laugh. Right, yeah. Oh, I shouldn't have left that thing open the whole time, the tab on the right hand side. Oh, well, oh, there you go. Oh, that's what you get. Oh, right. So now we're 25 minutes in. So the first 25 minutes is Bitcoin. We've had broad term strokes looking at things from what could happen, you know, from in terms of if we don't just, you know, break the mold, where we would need to go to start breaking that mold. You know, we're talking about how we need to get past 32, then obviously 34,500, then obviously 37,500, and take that and secure it to keep it going, or else, of course, any time from there, you get different pullbacks potential, whatever else. That's all good. Now we're 25 minutes in. Catch up with chat and see that nobody's telling me that I'm a complete deaf person or whatever, and I need to pay attention to stuff. I see lots of lovely people in here. We got the likes of Tony, 3000 Trin, Patrick Pellegrino, AB Lopez, Demo, Danny Morgan, and Trade Spotting, and Tony Wright, and Zoner. So fantastic. K-Doc, lots of great people in here. Fantastic. Really, really fantastic. Really brilliant to see y'all jumping back over. jumping back over to the charts, and I'm going to take, I've got all my tabs open at the minute. Frustration. So from 25 minutes onwards, let's call it 26, I suppose, by this point, then we're talking about Ethereum. Okay, so 26 minutes in is Ethereum. Ethereum, the $1,000 coin, ladies and gentlemen. Did you see it coming? Well, it was a bit of a fast ride up here. We'll take a look at that on this. As we can see here, I've got the 4-hour chart open at the minute. We had the 4-hour Bollinger Bands, and we traced them up the way. As we put in pullbacks, they remained bullish in terms of this. Now, of course, look, right, there's a few different ways of looking at Bollinger Band type stuff. You've got the Bollinger Band going to the top side, whatever. You move outside the Bollinger Band, pardon me. Let's all just say that that's bullish, right? That's what that is. Then, of course, what you're looking for is bullishness in this next period here, right, where all these candles are coming in at. Now, what would be bullish as well would be if a candle looked like this and came down and retouched the Bollinger Band, and then we put in another candle thereafter, which was another positive one. That remains bullish, okay? So just to be clear on things, because we saw this happening in the run up towards the top side. So when we came in here at $981, we went down and the bodies were closing down there 6% lower, but we actually dropped down, 8.5%. Now that's a tradable event in and of itself, obviously. And then we went towards the top side after that. Now we didn't perfectly touch the Bollinger Band, and let's just be clear as well, you don't have to perfectly touch anything. There's no rules about this stuff. But if you're looking to sort of break the mold or whatever, then you need to sort of take that out, and you need to be prepared to realize that this is your risk going long from, say, 926. Then there was always the risk of coming back down below 900, and that's exactly what happened as we then went on the way up the way. So there was that bullishness about that sort of 5% that went in there. Okay, there was that bullish aspect of things. Then it went on the way, etc., etc. And this is all very much bullish. And as you can see, at various times we did certain things we needed to do, but conveniently setting us up with opens lining up with where the bodies were, of the candles on the way up. Since from the point that we started this, it was just lining up nice and neat, really, for us in terms of those opens. Apart from this one here, where we were outside the Bollinger Band, putting in that extra risk. At this point here, we came all the way up to 1,176, and then we capitulated at that point back down the way, and actually went down a shocking amount as well during that whole move thereafter. And it came in here as a 25% drop off in price, $300 chopped off the top of it. And then, of course, currently the prices are happy up here, 17% up, but they're languishing a little bit, not having managed to successfully take out our previous high in this area in terms of the body closes at 1060 or so, and indeed obviously not really challenging anywhere on that wick or indeed the Bollinger Band upper line. So this story, as we look at this evolution, and of course, sorry for people who are exclusively looking to trade Ethereum at the minute, just to put this into context as well, we're seeing the same sorts of dance happening with regards to the Bollinger Bands over there on the Bitcoin charts, and this remains, this is the weekly Bitcoin chart here, and we pushed back into this area a little bit. So in terms of these higher term time frame candle charts, words and such, then in terms of Bitcoin being below 33,000 is bad in the way that over here on Ethereum being below on this 4-hour time frame at 1070 or whatever is not great. Okay, when that changes though, then things become very, very good again. Now this does line up with a number of targets we've had in the past. Let me just bring up the make this, give me my real estate back here, so that we can operate wisely. No, this is the wrong chart. I've not got my historical thing on it. Is this one? Yes. So this is what we're looking at. Ladies and gents, with regards to price action movements and whatever else. Let me just hide the Bollinger Band here actually real quick as well, because it's just, when you zoom out like this, not visible any longer. So what we're seeing here is that we pushed up into that zone, and where did we come back down to when we retested afterwards? Well, it was back in at this area here, which is the 618 Fibonacci point. Now, there's a lot of people that would have been taking profits in here, you know, and that was totally wise at 935. Wasn't necessarily the time to short it at that point. You would be looking for something decent structurally to happen. Let's just remind people what you would have then kind of needed to see happen. So say when you came in here at those highs, you were looking for something to come in at around about the 850s area to say that you're confident about a decent, you know, decent move towards the downside. And indeed, with any of these along the way, that was also the case. Now, when we position this up here at the actual highs and see where the prices are, we're doing that jolly dance on the 236 there at 10,022-ish buckaroonies, and that is of course a little bit of a problem. Now, it's not the end of the world by any means, but it's a bit of a problem, and we discussed that on the 4-hour time frame with regards to looking at structure, previous highs, and of course the positions of the Bollinger Bands, etc. Here we are having the exact same discussion again, but using Fibonacci's to do it. So that's how you kind of look for confluence and whatever else. Now, taking those things out lines up a few different, you know, 382 lines back up at that 618 zone. That's of course where the pitchfork is coming in at as well, with its upper warning line, or its upper line. Sorry, this is the upper one. What am I got? Yeah. With its upper line. Sorry, just the yellow box. Then you're looking down towards perhaps 781, right? At 781, then that is one of those massive pullbacks that we're talking about as well. You know, that would be 30-something%. So those 33% bullish, so to speak, pullbacks can happen there. And that might be, if you're sitting on the sidelines looking to keep your powder dry, a better place to be wanting to see the price go to than one of these intermediate zones. Whereupon, if it did go to, it could, of course, turn around. But in terms of managing that risk, I'd be looking at the key structural elements with this one beyond these little zones here. And what I mean by that is it's kind of seen easier with, you know, just hiding everything for a start and looking at the structure in the market on a decent enough time frame, etc., and you know, just bearing those levels in mind. But really, the beyond that, what I'm looking to say is that if we were, you know, able to sustain move at prices above 918, so we don't have drop downs of the 30% nature, and we're instead looking at healthy enough 10 to 20% drop downs in prices before turning around, you'd want to see the prices stay above $900 quite clearly. That's what you want to see happen. And the median line of the parallel of the pitchfork in the background, I suppose, debatable on that one, I admit. Then we can look up towards the next target, because right now where we find ourselves is in that in-between zone where we don't have the top side target having been come in yet, which is of course our previous all-time highs, and that's there at 1,416, and we've come all the way up here with like divergence after divergence after divergence. Is it still on the charts? Let's just bring up the RSI and see. Well, if you compare our high now compared to our previous highs, or indeed compared to the 23rd November highs, sure, they're not divergent, but we need to take out those August highs, or else, you know, any significant pullback we've got has got this sort of this overhanging from the past in terms of everything we've done so far has been positive and blowing everybody's socks off, but we've not done it with that degree of momentum that we had in the summertime when we were putting in these highs, and we want to see that happening. Now we want to see that happening at the all-time highs, as opposed to, you know, squeezing it a bit more, eking it out and getting there. Now, if we do get there, then I'm by all means going to be happy to reassess things at the time and, you know, go with it and whatever. But I'd rather see it with that healthiness. Now, we've had a pullback so far. Is that going to be enough? Well, time remains, you know, it remains to be seen on that one. But we could just keep going up. Sure, we could. Remembering back in August how when we came up and we pushed up past these zones that we had little pullbacks, and we're experiencing that in terms of this movement right now in the RSI, or the DMI I keep pointing at, but I mean the RSI just here. And of course the negative cross that we've got in the stochastics here on the 24-hour time frame. On the 4-hour time frame, obviously, then we see this big drop down being reflected more in terms of the oscillators than than in terms of the price itself. That's by virtue of the fact that we've got these two big wicks, not just the downward wick here, but the upward wick, giving you that push in terms of your true range, in terms of where the prices have been trading at its highest and its lowest. So when you compare that back the way versus where we are now, you see this has dropped off, and that's one of these instances where you talk about having given the oscillators a chance to reset. So if I then just jump on down the way towards the 1 hour time frame, then what we're looking at is we've got this consolidation pattern in here, and could this break either way? Well, it absolutely could. And if it were to break towards the top side, what would that be? Simply just in keeping with everything that we've already seen in the past, etc. And then that means, of course, that brings us in, well, that gives us our tie-in, our sort of segue back over again, if you like, towards the talking about things structurally, because a measured move outside of this would obviously break the structure, not break it, but maintain the structure of what we have just been talking about, you know, what we want to see being taken out towards the top side. Those are the keys for us. Now, if we do move towards the downside, then there is, which is, you know, and it's totally possible for us to do so, then there is the danger to be aware of how this drags down the way. I've had that chart on log, so you weren't seeing it expand towards the top side. Dragging it down, you see it expand towards the downside. 658 being where you could go to off the back of this, and that is the risk of this volatility that we've just had. We just talked about the good side of it, which is the oscillators having been able to give a chance of burning off a little bit of and resetting a little bit, and then entering consolidation at an area of potential sort of resistance, etc. The forerunning, the prelude to the all-time highs run, if you like. All that positive with potential for the oscillators, etc. And we've contrast that against structurally what we're talking about. If we do move down past these zones, is obviously very bad. Taking out this sort of circled white area over here and coming all the way back down to where we haven't seen the prices since way back when, on the 27th of December. Now, while that obviously doesn't seem time-wise like a big deal, price-wise, what you're looking at is movements down there representing that 35% drop-off in prices. Now, what we have seen, and it's worth remembering for all you memberberries lovers out there, is that the Ethereum pricing and Bitcoin pricing have been not one and the same, but very much one leading the other at certain times throughout this trend for the last while. It has been Bitcoin, I suppose. And what we saw the other day was that Bitcoin prices went up a chunk. Now, just let me give people a quick little sort of demonstration about how this went for us, if you don't mind. Now, I hope this doesn't mess up my overlays on the screen too much. Let me just get up BTC USD. Which one should we go with just for a laugh? Let's do it on something I'd never ever have on the screen for a laugh. Femex. If you want me to get a Carl the Moon Femex affiliate code so that you can help support the channel, then let me know and I will do so. This is the 24-hour time frame. I'm going to look at them both on the 4-hour time frame over here, and I just want to go back to for instance the end of this consolidation period and line it up so you can see how they line up looking at the two charts. Now, as you can see, my crosshair on this chart on the right hand side moves around, and what does it do on the left? Well, it creates a vertical line, serrated line, showing you where the vertical would be, giving you an idea of what the relative time would be. Over on the left, I've got the crosshair, so you can see it's got that horizontal line, and over on the right, it's got the vertical one. If I go back, you can see that we have had one rising up the other. So this price here, at this point here, at this point right here, there, okay, so you've got your eyes there, right, is this point here in Bitcoin. So what we see is Bitcoin went from 29,000 up towards 33,604, during which time Ethereum went from $731 up to $780. Now, while this is obviously a big move in terms of percentages over here in Ethereum, I'm talking 7%. That's a lot. What we're looking at over here in Bitcoin is, you know, nearly double that, up there at 13% or so, 12, whatever, if I drew it in properly, it'd be more like nearly double. So we saw that big move in the price, and then of course Ethereum followed along thereafter, and it does lead you into thinking, well then if that's the case and that's the case, then what is the dynamic that you're looking at the time when this shit's going down, you know? So if you want, and I'm aware this is being obviously important because looking in the Discord and stuff like that, I saw people discussing Bitcoin. What have I got the wrong chart up here? That's the wrong chart. I saw people discussing the relative the moves that we saw over the weekend, and how it was like how, you know, you would have liked to have been able to get some of them and have been confident in your trading as you went to get them, and for, you know, we know that for months and months and months we've had this dynamic on the go of one leading the other, etc. So again, this idea where you can see the vertical line, I hope you can still see it and everything else. Just checking in again, what had we done before we actually moved up? This is over here on the left chart. This leftmost one is Ethereum. Had this big drop down the way, 4 hour time frame, real negative price action for quite a while before coming in here and actually coming in and just setting in an equal or just ever so slightly higher low. In terms of the oscillators, you're looking at this point and saying, well, this didn't go any lower, so it's either, you know, convergent on a bullish sense or else bullishly divergent on a bearish. If it's a bearish trend at that point, not going to bother to look back the way, but you can see that that's actually, well, I did look back and you can see that was obviously then giving you this sort of class B bullish divergence. Not quite, but almost. At this point then anyway, we'd had a massive run up in Bitcoin. It had gone up loads and loads and loads, and we see that here in terms of this shocking down move on the Ethereum Bitcoin chart here, to the point where we got to this low over here, which is represented by just before this moving up the way. So that was the run down the way, that was the negative trend. Then you come in at this point just here, and what we have is the Bitcoin price has got to its peak in there at 33,500, and then it's dropped down towards 30,000 at that time period. So when it's dropping down to 30,000, we're coming in here and leveling out slightly at this. What is it? Is this the wrong chart? This is the wrong chart. I've doubled it up here. I've confused myself. Oh, my apologies. So if anybody noticed that, well done. I'm embarrassed. Well, not really embarrassed. I'm just annoyed at my because I was wondering, why is this not making as much sense as it was a minute ago? What did I want to show people? Right, let's take it from the top again. Big downward run here on the Ethereum Bitcoin pairing. The bullish divergence just showing in here in terms of the Ethereum Bitcoin as we were coming in here, putting in the highs on the Bitcoin pricing, and then consolidating here in terms of the Ethereum pricing, having had a little bit of a rundown in prices from 750 down towards 720 at the time. During that, you know, just finishing that point, then Bitcoin rocketed towards the top side. We got our 7% move, only just it took out these previous highs, so structurally we're looking good. We'd broken in terms of the consolidation ideas, like areas to break. If you were going to call this a wedge, then we were breaking out of it. We had volume coming in here as well, giving you perfect, you know, check in terms of confirmation. And then of course the result is that the overall Ethereum pricing shot towards the top side throughout a period when of course the Bitcoin pricing pulled back down the way, leaving us now in a position where this chart here almost becomes more important than we've treated it for a while. So have we seen something change here or not? We came down and this was a big downward trend. Where are my drawings at? Big downward trend here. We were never really able to successfully do anything from a Fibonacci point of view there, other than just get our sort of minimum moves really overall, I think. And now what we've seen is we've come up and we've touched off the 618, and this is where we're finding questions being asked at this point. Structurally then, asking questions then, the audience will know the answer to this already, but just kind of, you know, structurally looking at this, we have these body closures over here. Over here we have body closures up there, which are higher than these ones. So So this remains so far currently in a downward trend, while we had highs coming in that were higher than our previous ones. Interesting. Looking down the way here, you can see that we've had numerous... It was only at the end here we got into that sort of bullish divergence, really. Just coming at the end of this period, which is nice. As we took out the 236, back down again, double bottomed. So structurally, we can say a few things really anyway about this chart here. That movements up beyond this zone maybe look good. So let's see, can we see that happen? And if we don't, then of course the chances are that we see this tracing down the way. Perhaps, you know, following on from the Bitcoin drops then thereafter, and we if we see one in both or not, I don't know. But this now, rather than just simply being a byproduct of two individual things operating, is something to be looked to, you know, while we're putting in this, you know, crazy pushes towards the top side. Do I currently think that if Bitcoin were to experience a 37% drop down in prices right now, Ethereum would be able to go on to what would it be here in terms of this structurally? You know, would Ethereum be able to go on and do things like first off take out that 0.04 area, you know, moving up a chunk from where we are now, another 10-15% up versus Bitcoin, and really get past all of this area where we're you know, you could essentially just draw a line halfway along here and say, you know, good and crap. So we're still in crap. So can we get past that and then boost up the way? We could. This is what we need to see. Maybe this would operate as a bit of an analog for us, kind of giving us keep helping us get that context we need to see, just to see, are we really doing what needs to happen for us to get a runaway on Ethereum while Bitcoin has a pullback, you know. But currently I'm going to have to say that what we've seen so far in the markets is that's just simply not really been on the cards so much as an option for us. Going back to the Bitcoin chart here just for the meantime, this chart will do, I suppose, whatever. I'm bringing it up full screen, giving us a bit of the old 15 minutes jazz on the go, and then I'm going to check in with the chat here after I've looked at this on the 15 minutes for a second, just to get an idea of where we are. This isn't great, you know, this isn't great. In fact, it'd be better as a horizontal line. That's going to be our point of real interest currently, obviously. Maybe it's a little bit high. That's going to be our point of interest just now. In terms of asking questions of a pattern, are we going in for a descending triangle, or are we going in for an Adam and Eve in this point just there? That's what we're looking to. If we did get an Adam and Eve, then I suppose the 15-minute time frame could take us down towards this zone here at 29,374. And also if we got an Adam and a descending triangle that broke towards the top side, you know, whatever language you want to use, then that takes us up as high as 33,043, which is actually, you know, just not able to take out even this area over here, and that's going to operate as our next horizontal line. This can be the orange one, this can be the red one, and that can be up top a green one for just now, then if I had to color code them, and then I can check in with the chat and do the other two coins and then tune out. I've got a little bit of channel news kind of to talk about with people as well, looking for feedback in terms of, no, I'll make that green, in terms of, maybe I should make it red, no, I'll make it green. In terms of scheduling, because I'm thinking about what I'll do is take some time during the week to populate Patreon a little bit with educational materials and stuff like that, and do a few static videos. And I've had a lot of different feedback from different people recently, you know, asking for one type of video or another. And of course I've only really, since sort of around about my birthday, started the live stream, and I like the live stream. I love the interaction. I in fact miss yous. I missed you during the weekend. If I wasn't so hungover, I'd have come back and seen yous again. But then also as well, I'd face burnout as soon as I take on all these extra challenges. So that's something I'm thinking about. If I want to populate the Patreon or do static videos from time to time, maybe I need to go Monday, Wednesday, Friday with live streams, and then, you know, put whatever out on a Tuesday and a Thursday, and then I can think about occasionally at the weekend, you know, jumping back in again if I'm not kind of experiencing burnout. But obviously by the time it gets to Friday, and if I've done 3 4-hour streams and 2 3-hour streams or whatever by the end of that week. I'm kind of streamed out or whatever, and I need the weekend. I need it. And what I've experienced over the last couple of months is that I've actually, physically needed the weekends, and that sucks because I had all these plans to, to increase my my sort of output, my productivity. Jumping back over towards the chat then, because I want to see what's going on. Don't tell me it's not working. That's the YouTube page is showing me lies. Let me just go to my page properly so I can see that get set past all your lies. YouTube, don't lie to me. I need to see how everybody's doing, because I know that they're all in there having a great time. So stop censoring them for me. Great, nice one. Back in with the chat, everybody. What time? How far into the stream are we into it at the minute? 49 minutes in. 25 mins. First 25 mins BTC. Next is ETH. We look at ETH BTC and discuss that for 5 mins. 49 mins is chat, and then I'll be back over and finish off with what we're talking about soon enough there on that one. I'm going to also need to make it so that I can see my own name coming up. I wish I could see when people are talking directly to me in the chat. Maybe that's something YouTube need to do. Rocky was thinking of changing his schedule. Yes, TradeSpotting's pointed that out as well already earlier on. So it'd be good to have your wee face on. Oh yeah, did you enjoy that on Friday? I thought I had a really good time on Friday. I got thoroughly drunk in the end. I'm a total lightweight. First off, I'm a lightweight. Secondly, I deliberately didn't even eat. I thought I didn't want to do a live stream. You know, sometimes when you drink a bottle of wine and you're like, nah, and then you drink another bottle of wine and you're like, nah, and somebody maybe says to you, you were drunk last night, but you're feeling like, I don't know what you're talking about. I did not want that to happen, and I made sure it didn't by having a wine diet. So we've seen lots of nice chat going on in there from people, and that's nice to see. And I see as well, we've got Creole dropping his fire emoji. Good to have you, my friend. Mexican Titchin, I thought Link is a stable coin. No, we've seen some movements on Link recently. It's been quite good. Zill chart is good. Mex, Zill. Zill's been an interesting one. 3,000 trend, 100% believe that the liquidity crisis in Bitcoin will override a lot of the TA. Yeah, Demo. I'm going to make an assumption here because I don't have time to read back through the chat, so hopefully it works out, that you're basically saying, right, that there's hardly anybody out there looking to sell it on places where the free markets decide the price as opposed to an OTC desk or some behind the scenes deal, and then, or a futures contract being fulfilled, etc., from the past. Then what we're talking about here is that there's going to be a lack of supply, and that could get bought up, and that's going to be more important in terms of dictating said prices than actual supply and demand at the time. This is when things start to get a little bit messy for me, because I tend to kind of think about things from a supply and demand kind of point of view anyway, and the liquidity crisis. But what you're saying then as well is that it won't show up in the TA, and I have this kind of this idea that the TA, and it is essentially a representation of that free market, with a dash of manipulation and stuff like that in there as well. But I get what you're saying, and that we could see negative patterns emerge, and of course then just simply be on positive and keep going positive, and we've seen that so far, and that's been the strength of trend type of aspect as well as a sort of lack of supply aspect too. So a lot of the TA isn't going to necessarily lead to outcomes. It's just that what can happen is that that you can use the TA to confirm something once the price has already moved past certain zones. Now, we already know that, having bought our way up here, that there's tons of people around the world that have got pockets with Bitcoin in them that they could fire at you at any time, and of course they're only likely to do so once the prices move significantly beyond, from a statistical point of view. Somebody who bought over here at 27,963 is laughing seeing it at 34,000, and in all honesty isn't planning on selling it until in reality it goes down to 20,000. That's when they'll start thinking about selling it. If the price goes up to 38,000, they're not thinking about it. 40,000, they're not thinking about it. 50,000, and that's kind of what you're seeing there in terms of liquidity crisis or whatever, because it's all in these people's pockets and ain't going anywhere, except it goes out their pockets very, very quickly in a number of ways when the prices move against them, and that has this doubling down impact. And that is how then you get this idea of what happens when you break out of a parabolic move towards the top side. And if it just indulge me for a second and dive up towards a 24-hour time frame, you can see that this is the very definition of said parabolic moves towards the top side that we've been experiencing. And what happens when you break them significantly is that prices tend to go down 80%. And from where we are right now, if it just went down 80% from a textbook point of view, then that would be 6374. And that kind of is the TA, and it kind of is what you're saying as well. And that's been what I've been saying. I've been looking for healthy pullbacks. Unfortunately, and fortunately, we've not had enough / any of them really throughout the course here, and it all kind of ties together to form the same sort of a story. So what am I saying is that front running moves against the trend at any given time is not really ideal. So if you were to right now say it's definitely dead, I don't care, we've got these technicals telling me it's dead, I'm going to then base that on those alone and not wait for any confirmation from a secondary and third and tertiary point of view, such as, you know, you've seen divergence, now you're going to, and you're like on the CME charts, it's divergent on the CME charts, it's definitely divergent on the CME chart, so I'm going to short it. Well, you could wait for structural things to come in, wait for everything else, and that kind of is the TA story. We don't disagree at all. It's just different semantics there about discussing the same sort of thing, because I do agree with you that, and from a TA point of view, it's just that when you're in a really heavy trend, then you're going to get negative patterns which break out towards the top side, and it's not hard to find them. Here's a descending triangle that was on the past, you know, presumably here, and then of course we broke out towards the top side. Statistical likelihood, not likely. I mean, the very nature of where we've come to, this was of course a wedge. It doesn't look great on log, doesn't look great anymore on linear, whatever. This was this wedge idea that doesn't look great right now, and we've broken out from the top side to that. Of course, that's a rising wedge, and TA would say it was going down. Here you had this descending, broadening wedge, and of course the target, the price target from it was at 13,290, and you know, and at that point, you know, the TA got us here. And then afterwards, where did we go? Is it fair to say that it's simply at this point it was the liquidity crisis that brought us to where we are now, or is it more fair perhaps to say that from this point that in fact it was you know, what we'd already discussed that got us up to, you know, the all-time highs at that point, etc., 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 etc. It doesn't go the whole way, but you know what I mean. There's always a debate amongst everybody involved in the markets. Anyway, cool. I spent too long on that chat. Yeah, baby, yeah. Bo, says Johnny Smith. It's good to have you there. Yep, I was trying to start a short all the way up to like 32,000. Then was like, F it. Is this thing's going to 50k? Haha, missed that 35k short. Yeah, that's the danger. That's the problem. In terms of shorting this thing, right now, what have we got which has been giving us anything decent? Let's just look historically. This is the 24-hour time frame. So in terms of anything decent, we've only really had, you know, since the 9th of December, we've only really had consecutive green candles with the odd occasional red candle in between. When you're given those opportunities, you say at 24k, you maybe, if you're waiting for certain forms of confirmation, then you're losing out on a solid 50% of that move anyways. Maybe you only got into it at 23k and then got back out again at 22, having, you know, sat there from above 24 to watch it happen. If you're waiting for so that leaves you doing is kind of going in there quick and going down the way in the hope that you get like one of these type of candles like we saw between 28,000 and 26,000, for instance, for a $3,000 $2,000 whatever dollar move at that point. But that means you need to know when to get into it, because if you don't, if this doesn't turn into a wick like we saw over here on the 30th of December, really, you know, and then continues on thereafter, then of course you've not really had any of those shorts really operating for you. At this point here, in terms of the 24 candle, big move up, and then it has been hard. What was it that gave me justification? Now I'm looking at this and also trying to think, what was it that gave me justification? Because I was shorting it here at 34,000. So what did I think at the time whenever I was doing this? Was it simply off the back of this little bit of bearish divergence where I thought, nah, Might have been 35, thinking 35, it's close enough to 35, that's a target. Yeah, so that was kind of the idea here, really, was that, yeah, it got up close to 35, started to pull back down the way, gone down, and the divergence seemed real enough. And the I suppose as well, like I already spoke about in various degrees of detail, taking it, just in terms of managing things, coming in at a 236 and failing it, moving down the way. That isn't from 34,000 though, that's 33,000. That's the most sensible place to do it from. I honestly can't remember why. I think maybe it was something to do with Ethereum at the time, was it? Because of this, because of that drop down there. What time was that at? It's a 4-hour time frame on the 4 a.m. 4th of January, and then on Bitcoin 3rd of January. No, it wasn't that. Oh, it was that. That's then at that point, 33,600. Honestly, I can't remember why. I guess that was probably just being a bit of a punt at that point. And then here on this one, that was why, because everything was kind of going to shit. And they got in on it. Why though? This must have been from here. Alcohol's destroyed my memory. Oh yeah, no, that was why. Who cares about any of that? Right, so gonna have to move on because I want to get this episode wrapped up and all the rest of it. Eat some food and all that stuff. A couple of things let's go take a look at Chainlink and Tezos. Let's do one of those episodes where we take a look at Chainlink and Tezos kind of at the same time, right? Just to make things a bit different, right? Makes it a little bit harder when it comes to splitting and splotting things or whatever. But there you go. So from 1 hour in to this episode, we're going to take a look at Chainlink and Tezos roughly at the same time and talk about things recently for them and how they've performed. This is the 4-hour time frame that we have open behind us, and this is Chainlink. This is unlike me to have a kind of messy chart in this way, lols. What we're looking to here is sustaining. Can we move up past and sustain levels past $14.26 or not? We've done a few things in it at once with regards to this chart. Having broken out of the wedge here, come in and done our measured move. That's the textbook style measured move. This is the full measured move. So we didn't do the full one, but we did textbook style. To be honest with you, if I'd drawn this incorrectly, then we probably did, but I didn't draw it incorrectly because I don't do correct. Yeah, so we did the measured move perfectly, both senses in terms of body closes and the wicks and everything else. Crypto, as it so often wants to do, giving you that full move, whereas you wouldn't necessarily get in traditional land. And then came back down, and what we've done since is retested it. Now, of course, if we break into this zone, not good. We obviously want to see the prices sustain themselves up above, the $13.30 area, where we would find that roughness of support and resistance in terms of this wedge, but mostly in terms of the this horizontal kind of support and resistance that we've seen here all along the way. Resistance, inflection here, back down, slammed right through it. The one candle which did it, bypassed everything, moved towards top side, resistance, support, resistance, blah blah blah. Need I go on? So this is where we find ourselves currently, and that is not ideal, and I'll show you for why. So just taking in a Fibonacci retracement from our lows up to our highs, you can see that we're below the 1350 area where the 236 is. Actually we're below the 1430 area where the 236 is, and we're below the 382 here on this one, with the view to potentially going back down and retesting the lower end of this wedge again, at which point, what do you call it? Well, it's not so much a failed wedge because we did the full thing, but it really does sort of look like this type of overall range is what you're dealing with, in which case, over the period of the next week, we could be going back up towards that $16 target. I'd rather see that happen sooner rather than later, but we are where we are at the minute, and that is somewhere between having had put in a higher high and having put in a higher low. Where are we going to find the higher low? And on this particular chart right now, all of the sort of demand line in terms of if this thing wants to continue meaning anything comes in at the lower end of where that wedge was, forgetting about the top side of it and looking back over to the left and saying, well, you know, we came in here and we did enough by putting in a high, and at this stage it really doesn't matter so long as we don't take out any of our structure. And where is our structure? Well, our structure doesn't come back into play again until the sort of $11 area. Now I know that's a bit kind of mean on it for a lot of people, so instead we're looking towards this this line that we had drawn in last week in there at 1262. In fact, if I just bring up the candle, this thing from the past, then you can see what we were talking about back here when we drew those lines on, more or less, in terms of like moving past 1177 and then moving past 1250 takes us in line to go up towards targets such as 1482. But if we see a pullback coming in again, then movements down towards, you know, down past the 236 at this point here wouldn't be surprised, because the 236 is actually various horizontal areas. So if we did, as you can see, you know, this is before the price action came in, we already had those lines drawn in there, and that's where the 236 lines up at. So, you know, support, resistance, if we get supported there, then great. But, you know, if we see any weakness elsewhere in the market, perhaps that then shocks on through to Chainlink. And, you know, this is exactly what did happen, and this is the same sort of thing then, of course, that we can expect in terms of this gives us that insight into where we can see risk really coming in at. We want to see the prices staying above 1263. If they do, that's great, but first off, we want to see them, you know, staying above this area and moving towards the top side, taking out that 382 again. If it can't and it doesn't do that, then the 50% area, and while we'd love it to be great in there and support at 1280, we can see that it was obviously supporting resistance in the past, you know, could easily be broken, and I wouldn't be looking towards that line at that point either again, is it, you know, if we're going down at that stage, and we would be looking down towards the lower 12s area, you know, and that then again is one of these great buying opportunities off the back of what we've seen here is, of course, a bit of, you know, lack of divergence here on this most recent area in terms of this upward side movement here on the right hand side between this peak and this peak, etc. Sorry, between this peak and this peak, etc. But if we go back over to where our previous peak was and where we are now, how does that look? Right, RSI lives at the top now, fine. That also looks good. In terms of DMI, strength of trend, good. We have crossed it towards the downside, and we have got a downward slope on the ADX, but that's, you know, healthy retrace territory. You need that, or else you just crash down the way. We're getting support here at the neutral line. Now, the neutral line, we talked about this as well so much in the last week. You know, if the prices are up here operating in overbought territory, where do you look to on the likes of oscillators such as the Stochastics and the RSI before you start saying things are oversold? Where do you look to? It's the neutral line. There's your answer to that one, in terms of, well, not me, but someone called, like, I'm thinking McGonigal, but I know it wasn't McGonigal, whatever, some other TA person out there that got paid to write a book by those guys. So yeah, that's what we're looking at, and how and this has been okay. So, you know, so everything's looking okay so far. That's fine, right? What then? And we've moved up. We've gone past the 236. We could be looking at down towards $12.08. If we retake the 382 at 1350, then of course, then that just looks like that's all we're getting on this one. And the next target becomes 1435. If we manage to take out 1435 and you spend a number of hours, you know, 4-8 hours, whatever, up there above that zone, next target immediately becomes $15. And actually, the truth is, the next target after that goes all the way up towards $16.50. Now, where we came as well is the 618, where we've been before and where we've come again. We want to take out the structure where we were there at that point, at the end of that ascending, broadening wedge area at the 23rd of November. We want to take that high out at 1650, and then we can start to get more positive again. What does that look like with regards to the recent moves with Tezos? I actually didn't do what I wanted to do when I said we'll look at these at the same time there, but whatever, who cares? So we had these lines drawn in. This one never came into play again, thank God, because we really didn't want to see the prices going down to 180. What did we say though? We said that if the prices go down to 195, as they so often have been wanting to do, then that would be that as it is. And as it was, and we saw that happen over the weekend, giving people one of the best trades in terms of just being able to trade and knowing what you're doing, that you're going to get really ever. So like, while we all want to talk about all-time highs and Bitcoin and how it's great and blah blah blah, there's a certain beauty to talking about certain numbers again and again and again and again and again, and knowing them so that you don't even need to do the charting anymore, having got bored silly saying them. There's a certain beauty in that when the prices go on and exactly hit those numbers. So what were we talking about then? 196, groovy. Then of course up here towards 222 where you would take profit. If you wanted to be greedy, then you're looking at 235 at the top of the parallel channel. Then your expectation is to come back down towards 220 again, with the likelihood that you would go down towards $2.02. Bearing in mind that we did this here on 8 a.m. this morning UK time. Then you're coming back up, and where are you going to find yourself at 222? And where is the prices now at 222? I mean, this is fantastic. I myself personally, and I don't like to talk about trades that I do, I myself did this one up to this one, having took a little bit of profit in here at this area. I then shorted it down the way, shorted it down. I took profit here. Then at 222 again, I shorted it down. I was looking to get this move down to 203. If I then jump down a time frame even more so and look in here at this particular area, I'm actually curious about this myself because I can't remember what happened. Yeah, so I must have shorted it, I think. Yeah, so I took profit here and I took profit here, and then I was like, no, this is going on down, and I opened up a short again, and then at this point here I got stopped out as the prices moved up past 220 again. I was like, okay, I'm going to be busy, I'm not going to be looking at the charts, but actually what I think is going to happen is it's going to go down to $2.02 here. So I got stopped out, so I was curious as to why that happened, and it happened here on this particular candle right into this wick here, and then the prices then dropped on down to 2.2. If I had have been then paying attention, of course I wasn't, and everything else there at a couple hours later, then I would have got into the next move up the way and been back in here and taken profit. And where would I have taken profit at? 222. So this has been so obvious to us. Maybe this will help us with regards to getting some insight on Chainlink, since it's been so obvious to us this whole time. Let's do a couple of little things here. The Fibonacci from the low to the high. I'm looking at that and I'm annoyed that I missed out on this trade because I wanted it. I was just busy, and then I didn't take it, so I couldn't, and it's outside of my risk profile to just, and not care. So I don't do that. And then here definitely would have taken it again, but I wasn't putting in. It wasn't that I was like, the wisest thing. I suppose what I'm annoyed about here is that I saw this happen, and I could have put in an order at $2.02 or something to get on and along again towards the top side, and I would have been delighted at seeing how rapidly it happened. Although I wouldn't have expected it to. And in fact, when I came back in today here, I didn't expect to see this as it haven't happened as it has. So there we have it, and that's just that. Where we're finding support coming in with regards to the majority of these wicks, then subsequent to this move down the way, is at that 618. Having come all the way down to the 786 and the lower end of that parallel channel, I mean, for crying out loud. And then of course the prices are being resisted currently at this area, until this hour, until I started streaming, and then they moved up the way again, and we're at 221. If we can take out certain areas, let's say opens and closes above 222, then great, and we can look towards our higher targets. What are they going to be this time around? Well, they're going to be $3 or $2.39. So what it's going to be this time around, probably. And then you'd be wise to take profit, because what we've learned so far along the way here is that we'd be wise to take profit. Anyhow, what have we done? We came down past 236 down the way. We're challenging at the 382. As we know, here we were on Chainlink, and we're about to take that out and go, and perhaps then we could go towards the top side. How does that line up with what we're talking about with Chainlink? Down past the 236, we're below the 382, so that's the equivalent of it going past 13,850 in terms of movements up the way, like we're seeing currently with Tezos having done decently so far today. So if we can sustain levels above that, that's at 217 on Tezos. By the way, I highly doubt I'll ever be someone that says Tezos, by the way, because I've not got an American accent. So if you're sat at home going, why does Rocky call it Tezos when it's in fact Tezos? Just imagine yourself saying Tezos, and that's how I say Tezos. Right, anyhow, whatever. It's just that the guy, your man Brightman that set it up, calls it Tezos, right? So I'm calling it Tezos. So wow, the bigger picture, we've moved outside of a wedge here, come back down, retested it a couple of times, found support, moved towards the top side. During that whole period of play there, we were down towards that $2 and on up again. We did that test of this wedge. Gives us a decent chance prospect of going in for our next target up after the ones we've already just spoken about, you know, where we're looking at 240 as your next target. Gives us the next one up the way up there at 290. That's what I'd be looking to. Now, of course, that ties in with our previous high, giving you a potential for, you know, just people simply taking profit there at the start of this wedge. You know, it's got that nice structure to it, so that's all good on that front. Oscillators, no, that's it. That's it. I wanted to try and get something out of looking at both of these at once, and I'm not sure if I did get anything out of doing that. I don't think I did. Just other than the fact that in terms of both of these coins, that your next target really, beyond movements which are easy to trade, movements where you're offered significantly lower risk, whilst maintaining your reward. Once you go past those areas and you're looking for your sort of your next punt, is coming up towards 1640. I'm not a financial advisor. None of this is financial advice. And it's the same sort of idea as well. If I just actually, you know, disregard this movement here for now. In fact, I'll just hide everything in here so you don't get too distracted as I kind of show you the same structure with regards to the Chainlink and Tezos pairings, where you had that downward slope there, and you had this here as well, giving you that wedge idea, having come up here. And so far now, this, I'll just borrow this measuring stick, having not done the measured move off of it at all. But if we were to, in fact, that breaks the structure and goes up towards 17. But if you were to go for that 60% style move, then, well, we have done the 60%. So that's the next target, really, is our previous high. And then it's that $17 area that we were just looking at there. And it's the same type of thing, really, as we have on the Tezos chart. If I could find the one that's got that drawn in on it. Here, same sort of thing here, which we broke out of, and that's what we're looking to. So this is decent. That's structurally wise, that works. This is cool because these two coins are not exactly the same as all the other coins out there. There's BNB, there's HOT, there's Norwegian krona. I always call it North Korean, etc. That's got a different sort of layout to it. So we've got differences around the world. KNC versus ETH not doing so good, like Kyber Network coin. Yeah, so we've not really achieved the same things so much here. We're kind of trying to a little bit with regards to some of these other alts, but not so much there as we have with Link and Tezos together, both kind of doing that. So that's what I want to see happen with both of them over the next wee while. And there's certain things, I suppose, that might give us a little bit more insight into what things could look like if we see Bitcoin dominance chart, for instance, changing. So let's have a look here. What have we done with this one? That's not below the 236 in reality. No, sorry, that is below 236. Mess up. We're below there. We've retested it since, so Bitcoin dominance looking fairly shitty, unless it were to get a turnaround here. This just looks shitty, where you'd expect it to continue to go down the way. That's just in all honesty. So like the trading up towards 69 would be cool, but risk beyond that point in terms of the short term is high until really you've taken out 70s and stayed up there for a while. Then it diminishes rapidly as the market resolves to that new context. But until such times as that, you know, the risk on the way down towards 67 is the same sort of move. It's the same sort of move, and then when it goes past that, then you're looking for more. But this is where we are now, and having taken it from the 236 means you're in good position. But you can't trade this thing; that's not exactly real. But yeah, that looks pretty crap. You know, we've got a decent chance of going down towards any of these targets. 382 is where you want to see it turn around at if you're looking for Bitcoin dominance. You know, you want to be a Bitcoin maximalist. You need to see it stay above 67.5. Okay, that's what we need to see. If it doesn't, then cool, all to the good. Maybe we'll see some money flowing into the altcoins and giving them a run versus Bitcoin. In terms of the total market cap, that's weird. Yeah, it looks weird to the oscillators too. Obviously, it's looking like it's fucking, excuse my language, extended too much money in crypto right now. That's what that chart looks like from that point of view. All of these lines being complete bollocks on this logarithmic chart. And on that one, I've got no idea why they're there. I can't remember putting them on, so I'm just going to get rid of them. Were they even me, or did the cat do it? The cat might have done it. This is obviously great. Very, very bullish chart, yes. Volume increasing, yes. Very bullish, right? Very bullish as it has been for its entire life, right? Great, fantastic. However, and this remains bullish. We had that wick that came down the way here. It's the same sort of way that we've had whatever chart it was I was saying. I think Chainlink, when it recently took out it recently failed to take out its high, but it did it on the wick. Here we see it failing to take out its low, but doing it on the wick. That's giving you this obvious idea that if we see it drop below 780 billion, things are really pretty short-term crap. And I would expect to pull back to, well, that area, another 100 billion off. If it goes down to 780, could easily knock another 100 billion off there. That's more than 10% of the entire market cap. Now that could happen in terms of an alt season if we were to see Ethereum in dollars and Bitcoin in dollars both shit the bed, and they're, you know, it's within their power to do so if they want to start getting on with that. Ethereum is less important to me in terms of the meantime stuff. In terms of the total market cap and the Bitcoin dominance chart, I don't care so much about the Bitcoin dominance chart that doesn't include Bitcoin or whatever, or arguments about. I understand maybe if somebody wants to just look at something in particular and explain to me the benefit I would get from it, it would be cool. I kind of ignore Ethereum. I know that this chart is massively flawed. It includes things like market cap of, or is it the total one, whatever. Yeah, no, Bitcoin dominance is against things like dollar, which is obviously flawed. Ethereum as well, it's like with the same overall market, doesn't really seem to be wise, so maybe it would be good to have something else in there. Total market cap, whatever. I'm going to jump over to the charts. Tezos is at 22 to 22 to 22 to 22 to 22 to 22 right now, is it? Let's just stick on Tezos on the 15 minute then for a laugh. How are you doing, my pal? How you doing, pal? How you doing? What chart is this? Finance. Okay. Clear all that crap off there. Oh, it is. It's right at 2 to 2 to 2 to 2. So what do you think is going to happen here? I mean, this is obviously where a lot of people... Wait, excellent. Nice one, by the way. 100 boy. You just became a subscriber or joined the family. Fantastic. Brilliant. Yeah, are we going to see it pull back from here or not? I mean, this is obviously a relatively low risk short. I'm not a financial advisor, not telling anybody to short it. This is the target, obviously, we've been waiting for it to come up to, you know, and now it's a question of how's it going to handle it once it's here. The fact that it's, you know, 4 decimal places in, it's got a different number to 2 is kind of funny and everything else, but that's just like for the laughs sake. But let's see, hey, let's see. If it starts pulling back, then, well, it wasn't like we didn't talk about it. Oh, a Stochastics. I could do some Stochastics. I wonder what it's like. Can you take a look at LRC, please, Rocky? Loop ring. Okay, cool. Let's do that. I'm just looking back up the chart to see Leon's here. XTZ is dead, says Leon. Well, you know. Why is Chainlink so weak? Accumulation, manipulation. Why is Chainlink so weak? Let's look at Chainlink for a split second here. Bring up full screen. Zoom back out the way. If you mean weak in the sense that once it's had highs, it pulls back quite a lot, the reason for it is because of the overall volatility in the market and the irrationality that exists within Bitcoin and general, and the general markets at the minute. That's what's creating weakness. But in terms of its movements, it's been very strong. It's moved strongly to the top side, followed by a strong move back down the way, where ultimately we came in here and found support. In fact, it looks even better here now. I cleared all the drawings off in terms of just that, you know, or whatever. Does it look weak? It doesn't really look. It doesn't really. You'd have to use different semantics than that. That's 2 comments in a row though from you, Leon, which are not useful to anybody else in the chat. So yeah. Anyway, everybody's welcome to say anything they want to all the time. That would be cool. Of course, you're always welcome to. Don't know why that didn't come up on screen, by the way, 100 boy. I hope it did, and I just didn't hear it, but it should have done. That would be cool if it had have. Nice one, and it's great to see everybody giving him a welcome. A 3,000 Trin welcoming him into the fold there. Traceborn and Rocky, thoughts on CME futures going into Ethereum? Will it cause manipulated pullbacks? Cheers. Yes, there you go. Quick thoughts on that one. Absolutely. It's going to be a good place for doing that for folk. I mean, like, they'd be looking at this. They'd be looking at the charts at the minute and thinking, liquidity there. We could do this. I think yeah. Now, of course, it also means, you know, the exact opposite. Can it cause manipulated push-ups as well, like towards the top side? It's not like, you know, they manipulated both ways, and yes as well. I would say yes as well. I think that CMEs is a mechanism for doing that, not in a way that they would even claim that they weren't, or think that it was bad, or they would take that as a compliment. You know, it's like saying that there's a whale in your swimming pool there. I mean, one person hears there's a big whale in a swimming pool, that's dreadful, and then I hear that's a massive swimming pool. I'd like that rather than a 25-foot one. And you know, there's that type of manipulation. It's not manipulation, but it is. Cool. Anyway, so could you give a recap of your BTC key points? Sorry, I'm late. Yeah, I will. I have a dead bland answer, John. Futures markets are best for hedging against longs, and that's what I think they'll be used for. Well, there you go. Yeah. That's a good answer, though. The chart on this one, I'm just aware of the fact that it's up, 38% versus the dollar today. And of course, in the last, since the start of the year, it's up 125%. So I was kind of generally speaking aware of that. Not massively. I took a punt short on this last night for a laugh. So when was last night? That's 22. So it would have been around about... It would have been around about here that I was doing it. Yeah, because it's quite late. Aye, the daily close. Aye, that's when I was doing it. And then it went down as far as that. I stopped out of it though. Like in profit. I can't remember what I moved it to. I just moved it down the way. I mean, looking at the numbers that you're getting on these things, it's like the full move, it went down 12%. I can move mine into a decent, I don't know, whatever. Don't care. Moving towards the top side, wouldn't recommend to anybody to short this, especially not unless you've got a lot of experience doing this sort of thing. So I wouldn't recommend that at the minute. This is obviously very bullish. Couple of key things to be aware of, perhaps. If this pulls back now, it's going to look like a wedge, right? So if we see a pullback now, which we could, of course, we totally could. In which case, go ahead and short it. I didn't say to people, don't short things like this, because obviously that's 14% there. If we did, it doesn't look like we're. It doesn't look like this. Doesn't let me say we're going to. It looks like we're going to. This looks very good. Let me just be clear. Moving towards the top side. In fact, if anything, really, you've got this sort of ascending triangle type thing on the go, which we're just breaking out of. You could maybe make that case a bit easier. Doesn't mean that we won't come back down and retest it and whatever else before moving up the way. Huge percentages to be made either direction, trading this in either direction, whatever your sort of penchant is. What did we want to look at about this though? Was there something specifics? All right, just take a look at it. Cool. Yeah, well, let's do this then. So what have we got on the go? Let's just broaden things out a bit. Look at it on the weekly, see how old this thing is for a start. Look at those 2 weeks. Well, I mean, we know it because I just talked about it, didn't I? About the 128% top sides, but that's obviously fantastic. Structurally, you know, taking out that area at 25 was clearly significant. Likewise with those wicks up towards 30. So 25 and 30, big areas for us. Probably worth marking them in just for a visual idea, even though it doesn't take a genius to remember 25 and 30 in terms of numbers. Right, anyhow, we've come, well, where are we in terms of the Fibonacci extensions as well? Because the 1618 is going to be that first target in terms of movements past this zone now that we've gone into that. So let's just do this real quick. 1618, not been touched yet. Of course, the 1272 and the 1414 are giving you that feeling of how you could short it if you wanted to with either of them. But the next target towards the top side is in there at 42695, I suppose. So there's that. In terms of in terms of was that 1414 the top and are we pulling back from it now? The easiest answer to that question I can give comes in this format to say so long as we're above 32.3 then we aren't. That ties in with the pattern that we talked about earlier as well. That's that down towards 33 area for a move that way. So of course that could happen if we did see that, and that would make sense. We just need it to stay above that zone there, dragging that all the way back for its all-time highs, and it lines up with our red line, so that's perfect anyway. So we can just ditch this all together. Well, actually no, we'll keep it on and point out that if we did pull back, you know, horribly and seek out a higher low, as in maybe perhaps the way of saying it is, if the prices started to go down the way and then you went and stopped out, at what point are you looking to get back in again? Well, it would come in around about that area there where we have the 618 golden pocket in there, about sort of 18 up to 19 would be a lovely entry for it. Of course, that's 50% down from where it is now, and that's of no real surprise. That is not likely to get there, but I wouldn't be wanting to trade between the 30 and the 50 zone in terms of percentage pullbacks with looking for random sort of ad hoc long entries, because that wouldn't make much sense. How have we done then in terms of other ideas? For instance, a Fibonacci retracement pullback, not from the highs here and whatever else. Let's just do it from that although I mean I feel bad about not doing it from there. I would normally do it from there. Just to talk about from when we actually came in and settled in terms of the wick then on this, the highest body close candle of this run up the way, which represented our top then in the end, I suppose, which on a lower term time frame, this is the weekly, so on a daily or something like that, this is probably a bearishly divergent high, but this is the start of the downward move. So on the weekly I had to kind of justify my decision for not using that wick there, but I always would on the show, just for people who are interested. 1618 lines up at that red line, so there, we know that there's loads of confluence here in terms of the maths behind the algorithmic traders and whatnot out there manipulating these markets. If we do see a pullback from here, this is a 2.272, which is my preferred area to look for pullbacks as opposed to 2618. Weirdly enough, it would be these two that I'd be looking at, I suppose. This isn't necessarily something. I mean, how often do you trade against an extension like this? It's maybe not fair for me to say. I mean, it's maybe that's the kind of along the lines of if you ask me what's my favorite penny chew, you know, it'd be hard for me to answer. If I did have to answer, I'd be inclined to say cola bottle or something like that. But that's the answer I would have given you when I was younger, man. And I've not done the research in the meantime to necessarily make that assertion. I would say that this is where I would look to, though. I mean, in that zone just there, and that's happened now. If we did push on, though, that goes up towards 41.536, and that's where the 2618 is, and that's where the 1618 is as well. So I mean, this chart here is being traded not by emotional beings, human beings. Maybe these wicks and whatnot are, but in terms of the key areas for this, I mean, this is just a painting by numbers chart. So great, ride it up towards those targets, manage your risk appropriately. If you're looking to short it from here, well then I'm not going to, I'd be the last person to tell you that is a bad idea, but I would be using the ideas that I already suggested in terms of dealing with that. And if I just jump down to the 5 minutes time frame, you can see that what we would have been doing, I would have been short, if I was just trading this on the fly, I'd have maybe jumped in there with a short of that 38,500 area just when we started speaking and just said, this looks okay for one. Managing my risk really, really tightly in here. Movements back up above that 38 area, I'd just be more than happy to let that go, especially if I'd managed to put this as stop in profit right now or whatever. I would probably go for a risk-free move on this sort of trade that you do when you're cooking dinner. You've put it in there, you've seen that it's moved down this way, that in terms of percentage and whatever else, it's nothing. It's only 4.5% in the space of 5 minutes. It's more than enough to be not where you'd want to say I'm going to close this trade necessarily to go and then make dinner, but you certainly put in a profit taking stop loss on that one, and that's how I'd manage that trade, and that's kind of how I would do it. Surely I think we probably looked at that in enough detail. Rocky, in the near future, would it be possible to post a list of projects or coins that could be considered securities, or a link to a list if known? Cheers again. Yeah, right, that's something that I'm sure a lot of people are interested in, such as TradeSpot and straight away jumping in and saying good shout, good idea. There must be a lot of information out there about this, because it's something that a lot of people are interested in. I am as well. One of the things, by the way, that you can do when you're talking about it is that we're talking about decentralized assets, and a security is not a decentralized asset. But we're also talking about this modern world where everything's very different. The SEC has to reconcile old ideas, laws, legislation, all the rest of it with new realities of what these things are. Just in the way that your workplace might be having to reconcile the new realities of COVID with the new technologies of remote working opportunities that now exist, that like I know from personal experience looking at these things a few years ago, there just simply wasn't very many remote working jobs. there were, but they represented a tiny fraction of the job market, whereas nowadays it's huge. It's just the entire of Scotland as of midnight tonight, for example. With the laws, it's just the way it has to be. So the SEC is in a similar sort of position, and it means that it can't rely on some of the ideas that it used to in terms of saying, well, this thing isn't, or whatever like that. And some of them get greater weight than others. So you'll find things like the ideas of having a foundation for the coin, which is part of the decentralized world and operates independently of the coin itself and doesn't control it, is important. The governance, therefore, is important as well, because those two things kind of go hand in hand, and the activities of those involved in those two structures also. For example, Tezos has the Tezos Foundation. Now, if the Tezos Foundation were to go and try and pay an exchange to get them listed there, then it would put Tezos as being in danger of being a security. And why? Well, because with a security, there's a centralized organization which take on a degree of the responsibility, the majority, for its kind of success or failure. And that is, in a sense, what this security is, as opposed to necessarily that you own 100,000th of a building or whatever, this type of security that we're talking about from the past. So there's that. There's going to be coins as well launched on chains which are securities. So again, then you're allowed to be a security. It's not like securities are banned in and of themselves. It's just a matter of whether or not you're being a garlic bread about it or not. And if you're going to use your garlic bread and manipulate everything, just do bad business practice whilst clearly having a massive centralization to your coin and all of its success being run through the Ripple company foundation, which have the keys to the kingdom, blah blah blah, so obviously a security, right? So the SEC has said this is so obvious, and that kind of gives you a bit of a precedent or a type to look to. So while I don't have a list, I would say coins which are really not decentralized, big problem. Coins which have got teams, if you like, which are promoting the coin, i.e. they're not really decentralized yet properly in terms of the endeavor to what's going to make or break the coin if it succeeds or fails. That's going to be a problem too. And these things are identifiable in projects which maybe otherwise wouldn't necessarily be quite so identifiable. Another one of these things you want to look out for, of course, is going to be US based ones. Like that's a big one as well. Like just in terms of the logistics of these things. So like there's stuff like that about them, and I wonder about coins along the lines of like BNB, and if that would be considered to be one. Now they're in China and they don't give 2Fs necessarily, but how would it impact on it, and how does that work, and is it a security or not? And I wonder in terms of how it works, because not necessarily, I mean, you're using it for trading fees and everything else. However, it's so obviously kind of is, like, I mean, it's called Binance Coin and everything. Anyway, Decrypto, Argentina and Brazil get their own stellar stable coins. Woo, interesting stuff. Well, that's good to see. It's good to see. I'm really interested to know if cool to know, says Zoner as well. I was kind of thinking that, but I wouldn't touch Stellar. I agree with what Mexican Kitchen is saying. Yeah, so that's kind of what we're getting at here, I guess, as you guys are talking about it. And I'm talking about it at the same sort of time. Stellar will be the CDBC blockchain of choice. So, like, that's kind of like what we're getting at. So it's like, if you're going to be centralized and everything else, and that's how you're going to operate, then you have to do it the right way. Maybe they have. Maybe they haven't. Otherwise, XRP can suck my balls. Exactly, K-Doc. You're right there. Exactly. So yeah, so it's like, I wonder. And as well, like when they get these, what's going to happen with Argentina's stable coin? What's going to happen with Argentina's stable coin? What's that going to look like in the long run? Going to get off LRC. Can't believe I left this on the screen for so long. Is there anything else anybody else wanted me to take a look at, by the way? In the meantime, this is interesting. Look at that lovely short, that hypothetical short working out perfectly. What do we want to say? We don't want to be greedy, or not greedy. We don't want to be too like, oh, Rocky, you're amazing. I don't want that crap either. So let's not. I was talking about it, and let's say and it was up there when I started talking about it, right? But let's say I waited for a second and got in at this price, 38. Say I got in at 38, right? Where are we now from around about 38 down to now? We're at 2.7% profit. So you'd cover your fees easily, I suppose, on most exchanges if you had a stop there at 37.5, and then you could forget about it again with a take profit. Where does the take profit be coming in at? Do I want to be greedy on this one? Probably not. Take profit in around about that area there, whatever that means to you. Perhaps where I already kind of got at before, I probably would have gone for a 38 down to 33 up to 38 type move there on this one. In the meantime, if I'd have been trading this myself, which evidently I'm not, because here I am chatting with yourselves. This is similar to how I was talking about how I took one the other. Whatever, it's all good. Let me go back to Bitcoin, and then back to the chat, and then see if anybody said they wanted me to look at anything else, and then tune out. Essentially, what we getting here? I don't like this aspect of things overall. It doesn't look great to have a descending triangle forming up here. The failure to take out the 236 here isn't exactly ideal for me. That's not the 236 though. That's not the 236. I'm on the wrong chart, so that doesn't line up. Anyhow, so that's what we're looking at. So it's the 382 in the end, and failure to take that out is the problem, and the 236 in here, because I knew I was talking about something that kind of made sense. But it's, you know, when you see these things all line up perfectly, then again, let's just remember that whether or not you believe in nature and snails and leaves and everything else, or you think it's all BS, these things line up for a reason. Whether or not they're, you know, like I'm saying, it's nature and leaves and shells, or whether it's because people have been told about leaves and shells in nature and that's why they line up and it's a self-fulfilling prophecy, doesn't really matter. We need to break this. We need to break the head. We need to break open Eve's head. We need to take Eve's head and smash it open like a coconut. Then we need to jump up to Adam and gouge his eyeballs out, right? That's what we need to happen. And as soon as we've gouged out Adam's eyeballs, we need to start, you know, grappling at the ankles of 37 or 32,700 and be hanging on here, pushing up the way as opposed to coming down the way, handily setting this up to be a high and a higher low thereafter on the way. That would be ideal. If not, then that's that. Yeah, I did. 100 boy supported. Yeah. So I've just had an announcement from somebody. I should take a look at ZIL. Yes, I should. I'm also interested in ZIL, which has been so good. Somebody commented on one of the bottoms of the videos, like in November. Zilica, Rocky, my man, Zilica, check it out. It's been making me a rich man. And I checked it out and I thought it is good. And I'm happy for them. But that was a long time ago now, so they've done very well since. Now, where are we in terms of this thing? Looking at this, it just curved around, didn't it? Came up here. It really did well since the end of September. Really, when other things kind of went to crap at certain points in time, this one did well. This is disconcerting. Okay, this top is disconcerting. Where's that parabolic tool? I can't really be bothered doing it. In fact, it's just way easier to do this since the parabolic tool is drawn on using arbitrary points essentially anyway. Then it wouldn't look like that though, damn it. Then you can see here that we're essentially at the point where we're really asking, are we breaking that move towards the downside? Now I think it's early days on that one, really, to be honest, quite yet, although this is obviously not great in that sense. Let's just do a little bit of analysis. It's funny I don't have anything on this chart because I've definitely done this a couple of times on the channel before. At this point here, I'm starting to think, do I want to do it in from, no, I can't tell where the all-time low would be at. I might as well just be going back constantly. Well, actually no, there would be where the all-time, whether that's the all-time low or not, that's the most significant low of the last year. And what is it? 14th of March 2020. God, what a surprise. Just like everything else from this world of cryptocurrency and markets in general. So it's down here on this one. Come on, snap in. Right, that's going to be our low for just now. Now I know this could have been done in a number of different ways, but I'm looking for essentially the entirety of this trend to be what gets charted here. So moving on up. I mean, obviously, as I'm dragging this up the way, it's you can tell, I don't need to start speaking about it, but you can tell what's happened here. So far, we've come down past the 236, down off the 382, moved up the way, struggled to get past the 236 at 76 again. Actually, how long has it been since this one happened? It's the hourly chart. So 72, all the rest of it, they've not been taken out yet either in the last few hours. Because I mean, this has its own obvious story to everybody else that's watching along. So I take it in from the high, go down to our low here, and you can see that, you know, the 236 is in there at 72, right? That's why I was saying 72 just there now. We've not taken that out yet again either since, you know, and actually done it yet. Wheeze. I hope you can't hear me wheezing there. I'm feeling a bit sick these days. I think maybe I've got COVID. The other really interesting thing happened to me the other day where I couldn't taste anything or smell anything. Which I found, you know, on the one hand a little bit scary because I didn't want to kill anyone, and then on the other hand really interesting I'm going to put moving averages on this. Maybe Bollinger Bands. Right, we're on the 1 hour time frame. Let's just stick the Bollinger Bands on and give us a little bit of context and around about where we've come from and where we've been going of late. Obviously, 1 hour Bollinger Band towards the lower end of this thing here and struggling to get back above the median line of it. The 1 hour Bollinger Band's not so useful really in that sense about, you know, what's going on here. It's too close to us. We're still, you know, a mile away from 73 and a mile away from 64. You know, we're looking at a couple of decent sized moves between either of those two zones, but you know, going down towards the 64s, we can expect to see 63 again, and breaking down past 62. Then I'm looking to go breaking down past 60 means that you're looking for a move down to 51, okay? That would suck from a broader perspective because it's taking you down towards the 50% area of the big Fibonacci. You know, I mean, obviously things don't have to stop there, but that's a big enough area. Now, if it did stop there, that'd be good structurally as well. Looking to the left, see here where we had those highs. Here we got support, and then when we came back down, it's a retest of that area and around about that median line. So there's that. The 618 though then does become a realistic possibility as well with any movements past that zone, and that again is shocking. Every single one of these is huge. You know, 20% to 30% in terms of the golden, in terms of the 50% to the golden pocket, down to the 50% at 17% down the way, and down from the 236 down to the 382, same sort of dealio. So, and we've done that now already. We've done that one, so we want to see this be taken out. 72 is our top side target. Take out 72, then things could be quite good again for us. Weekly Bollinger Band. Is it any real surprise we pulled back? This is what I've been talking about. If you watch the whole episode, for instance, then this red candle here on this Bollinger Band setup will be of no surprise to you then to see that while this obviously did continue to trace towards the top side, to move towards the top side, the Bollinger Band moving all the way from where it was here at sort of 61 up to, for this month, 66. So a 10% upward move in terms of the Bollinger Band, and where we need to, you know, wouldn't want to go down the way. This has given us that support. That's the weekly time frame. This is a lesson in and of itself, as is this candle here. That other candle for reference on the 8th of June 2020 is another interesting one for us. Just, you know, just in terms of education. But looking at this right now, you know, staying above 60s, staying in that, well, actually screw it, down the way. We've moved down, but we're not like breaking structural stuff, whatever. That's again same thing, kind of analyze that. I'll just put the moving averages on here. I'll hide the bollies. For my entire life, by the way, I've thought of Bollinger as champagne. For anybody who gets those, who doesn't notice the occasional visual pun that I do when I stick a bottle of champagne in the background and I talk about something on one of my thumbnails, that's to do with Bollinger champagne. I really hate the name Bollinger in terms of anything else. I would hate to be called Bollinger. Gah, sounds like a stupid comic cartoon name. So I feel sorry for John Bollinger in that sense. Not much though, because a name is a name is a name, and what's in a name? The 8-period moving average, right? This is what we want to see being respected as we are here right now. This is a 2-day time frame, but actually jump down towards the 24-hour time frame. That's better. We're sandwiched between these two. Downward slope on the 8, while we've got an upward slope on the 18. You know, all of these things is kind of building up to at what point do we break out of the move of what's been a parabolic move towards the top side and start looking for really big moves down the way. And if you were to be looking for any big moves down the way, then you're looking down as far as 37, and that's nearly 50% off from where the prices are right now. So you don't want that. We've got a golden cross, and that's been respected. Whatever. The 4 hour though, we're below the 50 period. That's not a surprise. 50 period coming in at the 236. There's more confluence there, taking out the 236. Either of these 236s, but you know, primarily the big one here is going to be important for us. If not, then down the way, got a downward trend here. So let's look at the RSI and whatnot. not got divergence between these lows. 1, 2, 3 lows, 1, 2, 3 lows here. So you can see there's not divergence here on the way down as we've had the prices going down in that area. So that's not good. Not that it particularly means the end of the world or anything, but it's not good. In terms of if this is a higher low at any given point along the way, then what are we comparing it to? Any of these in terms of the upward trend? You can't really compare it to these two previous lows because they're not there. Those are a bit fluxy as well. Going to jump up to the 24-hour time frame and see if there's possible for us to get some hidden bullish divergence on the go. Meh, no, not there, not really. No. Nope. Curve around on the ADX isn't great to see on the daily time frame. That doesn't look good. This thing is currently experiencing a retracement, a pullback, a healthy one. It's done enough for it to be enough, okay? What we need to see happening is the positive story, which could be made on the lower term time frames, start to come into effect and really pull things towards the top side. Otherwise, things aren't looking good for this one, which is a shame because it has been doing well. I really wanted it to do well. I don't know why. I had the other day I had an irrational like for this thing. Just the other day, I think I was like, I like this coin. All of a sudden, I think it was when I was looking at a list of coins here. If I go on like the Binance BTC one and scroll right to the bottom, sort this by symbol, then ZIL coming in right at the very end, and I thought, yeah, that's cool. Partly because I hate 0x irrationally for similar reasons. What's 0x doing at the minute, by the way? Oh, Jesus, that's versus Bitcoin, so of course it looks like that. Well, what would it be without looking at versus Bitcoin, I suppose? Here we are looking at Silica versus Bitcoin. And this is not uncommon in the markets, you know, despite this being one of the best altcoin performers of late, and also having a very good day-to-day versus Bitcoin, we're not doing anything quite yet. We want to see this take out the 8-period moving average and start to slope towards the top side. It's not coming. I was expecting to see no, it's not got any. Yeah, on the MACD we've got the divergence. The MACD, maybe given that this is actually a secondary market being manipulated by other ones, is maybe the important part on this one. But anyway, I didn't mean to come to that coin. I wanted to be on Silica versus USD. Here's an old chart. Well, that's it. If you're looking for a short move on this one, then taking out 57. So let's just say if we can't remain in the 60s overall, and we are properly into the 50s again, then you could maybe go for something like 55 down to 35 as a possibility, you know, for a really big move. So like you'd be looking at a solid 35% then at that point. That's so rank though. I want to see this cross back around again. This is a 12-hour time frame. On the 12s then, we'll look at it as spread between the 12-hour and the 2-hour, okay? Let me just line this back up down below again into its position that I want it to be in. Go on down the way. Right. Okay, so this is the shit. I did it in the wrong position again. This is the RSI here on the 12-hour time frame coming in here, not quite taking out our previous low. While obviously on the 12-hour time frame, you know, this is way higher. This general area of a low here compared to anything over here, way higher. Not quite there with it, but almost. You know, just almost got that Class B bullish divergence. You know, it's almost there in terms of like the idea, a hidden bullish divergence, hidden in terms of the idea of this. You know, if we see a turnaround from these points and go towards the top side, pardon me, that's very, very good. We've got this early cross here on the 8 period over the 18, you know, that's okay so long as it doesn't stay cross for long. As we see on the 12-hour time frame, that happens quite a lot. Just need to see the prices taking it out, and at this point it can take out both of them, you know, and start to move the two of them rapidly away from each other again. Putting in a topside target at 73, various other Fibonacci's and whatnot line up with 73, the 72, 73 area, 72 to 73 area, you know, taking that out means moving beyond that. Is our topside resistance for us. Taking that out, really good. If we do then move past 75 thereafterwards, continuation would be in store, and I would look again for new all-time highs, I guess, on this one. If not, then, you know, things don't look so great, because suddenly, you know, we've just been moving towards the downside. We'd have a rejection of the bearish control zone if we didn't move up at this point here on the 12-hour time frame, and what could is conceivably be this, you know, really strong hidden bullish divergence would just simply turn into convergence as the prices continued to go down at that stage. On the DMI, we have a cross here as the ADX is positioned in such a way that this could adopt a strength of trend move, as we saw here. You know, there wasn't really so much of a cross here, but this sloped back around again at this price here after a movement down the way, then up. You know, what we want to see is something similar to kind of to that happening here, and us moving towards the top side. This is going to be a representation of what price action we see, and that contends against the broader picture, which is the 2-day time frame. As we came up to these highs, they were without divergence here in the 12-hour time frame. As we came up for these highs, they were also without divergence on the RSI. It was on the stochastics, sure it was, but not on the MACD or whatever. On the on all of the oscillators apart from the stochastics again here, and we're in a trending market here, and I'm giving precedence to other moves at the minute. We're doing really well, providing we stay above the 67 area and don't lose that in terms of the 8 period here on this time frame, and the various Fibonacci's and whatnot that coming around those zones. That's going to be good for us, and things could be good. Now if we do move down the way, there's a good deal of risk in here, so I'd be managing any trades in this area tightly with stop losses and just being aware of the risk that I'm taking. But beyond that zone, beyond the sort of 55 area, you do open up for a move potentially down towards the 30 zone to come in and retest that 50 period moving average there. On the daily time frame, we know that the 50 lines up at 43, and we know that the 200 lines up at 26. But really, if we come down at this stage, I would expect a wick to come down and, you know, push past these into this zone, bringing us into that mid 30s area. Now that's all the negative side of things, but to reiterate, 73 towards the top side, and really if we're going to be, you know, cruel about it, to be kind, it would be 75, 75, 75, 75 on that one, and then perhaps we get to move up the way. There's a few things which, you know, really don't get a look in very often in terms of trading in the modern era by perhaps enough people, and I would just bring this story on here to kind of line up. I'll leave the moving averages on as I do this. Yeah, I'll leave the moving averages on as I do this, and this will be one of the final notes of the day, by the way. So just so people know, unless TradeSpawn tells me that I should do another coin again or something after, I'll let you know. TradeSpawn, tell me if I've missed chat in there with people telling me I should be doing something. 24 time frame, you know, you'd have gone short at this zone. In fact, with these wicks coming in down towards the 69 area, you know, they start saying you should maybe go short. Now the volatility and everything in this area would have given you a fairly shit entry on that one, having spent the majority of the time underwater until just a couple of days ago when it moved back down again. And so far, you know, we're in the region where we could be taking that out of the way. You don't just trade off the back of this. You know, even the guy that wrote the book himself tells you categorically within it to not just simply just exclusively do that. However, people who talk about this and you know, talk about it as if, you know, as soon as this flips, then you've flipped as well. Well, this is one of those dodgy areas, and sure, at the minute is working out, and of course, you know, you wouldn't actually stop out of this until you've gone past 95. That's crazy. If we go over towards the 2-day time frame, you can see that this is just flipped to being short at this point, and it's, of course, you wouldn't flip back again until 105, and that is crazy. Sorry, 10.5 cents. I'm calling it 105. Whatever, 0.106, whatever. It's my mind. And of course, you know, this got triggered by coming so close to that 18 period moving average here. This is the first dot. It's too early for that to be the case, and you wouldn't go that way. In terms of the weekly, you're miles away from stopping out. Oh, back over here, did we have a cup with handle? Sorry, I just got distracted as I noticed my old chat here. I can't make it. Oh, there we have it. Oh, there we have it. Oh, check that out. Oh, wow. Old technical analysis. There we go. Sorry, it's just a little distraction for people who weren't subscribed to the channel back in April 2020. So somebody asked me to take a look at this thing, and I said, if tests weekly 20 EMA, look for a turnaround and ask question, is this a cup with handle? So on the weekly, what did we do? We came in and we tested the let me just put it on. So it's not the 21. Did we test the 21? Just let me change the other one to 21. I suddenly stopped caring about the technical analysis for the present, wanting to go on a memory trip. I'm sorry about that. Aha, we did. We came in and we tested the 21 here, and we tested it a bunch of times in at this area. So the question became, is this a cup with handle? So at this point, what you would have done is you just said, well, what is 50% of the move from the bottom to the top of that one? Where's 50% at? There it is there. Taking that area back out towards the top side was quite good, and it gave us that cup with handle move. Now, waiting for confirmation on this one, you didn't actually start trading it till the move past this zone. So this is on the weekly time frame. So in this week here, there was plenty of pullbacks, and in the following week there was another pullback. So there's plenty of opportunity to get in anywhere around the sort of 26, 28 cents zone. For 2 weeks you had that chance in here with the cup with handle, and then what did it do? Boom, move towards the top side. And how is that gone for us then? Let me just take a measured move of the cup with handle by doing that down to there. So that's the full thing, and pop it up here and anywhere in that zone, and then we busted that massively. Now 56 coming back into reality again. If 56 is where we were saying if we go down past this zone here, now which is you know, essentially like saying if we go down past our measured move area for the cup with handle in here, then things are not good. Right, so if we do that and we've got broken past that structure, then that's not good, because the cup with handle, which this isn't technically because it's a continuation pattern and that's been a downward trend, but whatever, right? That's a significant area, right? Anyway, we've found a support above it. Whatever. What else did I want to look at? Oh, the parabolic SAR. So we have that. You can see the weekly time frame. You're long on this for ages. You have been since November, and that's fine. And then going down the way towards the 4-hour time frame here and seeing, no, the 4-hour time frame sucks. So it's the 12-hour I wanted to look at. Yeah, so the 12-hour is saying to you to flip long at 84. Fair enough. In fact, in terms of this one, you'd be taking out that previous high in there. Structurally, that's good. You'd be above a number of moving averages. I want to see us taking out the 21 EMA naturally as well, first off, before anything, and that's in there at 72. But if you want to be tight on things, 7575 like we were speaking about, and if you wanted to then wait for confirmation, that's coming in at 85. Okay, same story could be made towards the downside, but let's just say then in terms of those numbers that you're looking down towards 62, and then after that 56. And if you want to then have a big old fat ass move off the back of it, you'll be looking down towards the sort of 30 to 40 region. Cool. Stated they'll hold for a decade. Yeah, they'll most likely never sell, because there's the way that they primarily make money is, I mean, beyond the fact that they're all absolute trillionaires, the way they primarily make money is by people buying and selling into it. They manage it for a fee as well. So it offers you exposure to Bitcoin, which they own, and you don't own it. You just have exposure to the price changes on it based on the demand and supply for access to their fund through a mechanism called cap stock. They decide how much you get of the fund if you buy at close of business on any day or at the time that you buy it, and if you sell out of it, then they do the same thing. And it's like a one in, one out mechanism for a nightclub, with a little difference in there for themselves. And that is how it works. They've got no need to sell their Bitcoin. They've got a need from the point of view of their customers to not sell their Bitcoin, because it would be kind of like investing in a banana farm and then turning up to find that they'd sold all the banana trees. He'd be like, this was a stupid investment. I thought you said I was investing in banana farms. And they said, no, it's just the concept of a farm you're investing in, not bananas. Well, no, that wouldn't work with Bitcoin. If you turned up and they said, where's all the Bitcoin? They say, oh, it's just like an idea. No, that doesn't work. So they actually won't do it, and the only way that they can guarantee people that they wouldn't is by creating this fund and to have it have that long-term value, is to say that they won't. Now, to say that they won't sell a single penny of it is interesting, but I guess, you know, they just don't have to. They just don't have to. That is what it said. That's what we chatted about in the chat on the comment the other day, Kevin, as well. Is like, and that's it. It's like, and they won't sell unless they had to. And what circumstances are going to force them to have to at this point? Like nothing, really. So I don't see it happening for a long time. They can just sort of do that. Anyway, cool. So when sats equals dollars, wow, that's right. So Zoner, for your entertainment, July 2021 will be 77 years since the Bretton Woods agreement in Christine Lagarde's 2014 IMF speech. Since the Bretton Woods agreement. In Christine Lagarde's, why can I not read anymore? 24 IMF speech, she goes on about how a new Bretton Woods agreement and the magic number 7. Interesting. Well, if you divide 21 by 3, you get 7. July is the 7th month of the year. What happens if you divide 2021 by 7? Oh my god, it's going to happen on the 288th day of the year. Let's just search for what is the 288th day of the year. Let's just see. It is Epoch Converter. It is the... I can't believe I had to actually scroll down this bloody webpage. It is August 13th. It's a Friday. There you have it, ladies and gentlemen. So our research proved extremely useful here. Friday the 13th of August. Oh my effing G. That is going to be Friday the 13th of August. I mean, if we learned anything, oh my god. Oh geez, worth tuning in today for just that alone. Oh, mind thoroughly blown by that one. Thank you, Christine Lagarde. I don't even know. Do you reckon it's one of those moments where she herself doesn't even know just how insightful she's been? I wonder, could that be the case? Could it be the case? Rocky, bring back the turtleneck. You want? I'll dress smart for you next week, okay? Yeah, okay. I'll put on the brown turtleneck next week. I'll dress smart for you. I'm in comfy mode. I'm in comfy mode, right? I'm in comfy mode. Night Mex. Good night, Mexico. Buenas noches. Thank you, Jamie, my brother from another mother. Someone else, please do it, though I can't remember my password. Oh, I don't know what that was. Missed that one. Night Mex. Halloween. It's Halloween as well. Oh my god. Oh my Jeebus lol. Cool. Nice one. Dude, Rick Astley in the background. Rocky, I think we got the formula to success. Margaritas on me. Really, Mexican Kitchen, I can't wait to come in and actually cash in on these margaritas and tacos. Like, every time we talk about it, makes me want a taco. And a margarita, why not? Rothschild's Economist magazine cover, 9th of January 1988, Stella logo, Saturn. On the 9th of January 2021, it will be 33 years to the day since mag cover and article about one world currency. Oh my god, MGS. John, you are tapping into something here. What is going on? You've got are you a clairvoyant? You're clairvoyant or something. Okay, sports jacket with sleeves pulled up the forearm. That is my natural disposition as well. Every time I put on a shirt and everything, it's straight away that. If I know I'm going to be putting on a shirt jacket or something or whatever, it needs to have that rolled up as well, and I do that. But I don't mean to look like an ass. It's just it just doesn't feel right if I don't. I was saying if they do Capstock and run it legit, then they will have a compliance and pricing team. You could find staff on linked, and get the scoop for the price of a large coffee. Yeah, totally. The compliance team would be an issue for them on that one. They're listed on NASDAQ, so they've got all of that. Right, anyway, not seeing anybody say that I need to take a look at any particular coins, so I will start the reverse roll call. I'll start the reverse roll call now and give everybody who is within the last 200 chat messages on my screen a shout out, and I'm going to do it. And I'm going to do it now, okay? And then what I'll do is I'll come back to the bottom of the chat here and finish off with you and say what the format will be. No, I'll do that now. This week, I think what I'll do is I'll go Monday, Wednesday, Friday with the live streams. Take Tuesday and Thursday to make static content, so quick videos for Bitcoin, Chainlink, Tezos, whatever I decide to do, and then also an educational video for Patreon. Start to remove my educational videos from YouTube or whatever, put them on Patreon so that the value's there, and tighten them up or whatever. Don't know what I'll do with that one. Take all your feedback on board. If you really want me to come back and do a live stream tomorrow instead, then be sure to just hook me up, direct message me on Twitter, and direct message me on Discord, or indeed just chat at Rocky Outcrop in Discord or whatever. Ideally, let me know in the comments on my video below on YouTube, and I'll read it and all the rest of it. So if that's what you really want, let me know, and I can come back by popular demand. I did try to go quite detailed on the technical analysis for. Tezos' technical analysis has been drilled into all of us for the last wee while. You get good solid 10% moves if you play your range right. Looking beyond 10% is greedy, and the risk to reward goes out the window at that point. If you're looking at Chainlink, then to be frank, the same thing's true, really. Although you're seeing 15% more regularly on that one. Right. So reverse roll call time. Let me know what your thoughts are. If I've missed anyone and there was some if there was some coin that I really should have taken a look at. I don't want to leave anybody sort of saying that one time when I was young, I went to this fair and I had to queue up to get access to this thing at the end of the queue. And by the time I got right up to the very end of the queue, they said, right, that's it. And they closed the whole fair down. I spent the whole day in a goddamn queue, and it was a bad memory from my childhood. I'm not happy about that. So I wouldn't want to force that situation on anybody else either. But here's the reverse roll call, and thank you so much for every single last one of you for tuning in. If you didn't hit that like button, then do it. If you're just joining us today for the first time, you're like, what is this amazing, beautiful, wonderful, mad, lovely family that I've just discovered? We're called the Outcropticians. You hit that button, subscribe, and come back and join us again tomorrow, because we would love to have you. Right, cool. Thanks so much. So cheers, Kevin, for tuning in. Really do appreciate it, as ever. Just looking at your last message there, you're talking to a co-worker this morning about crypto and how fiat is on its way out and they will create a world currency, and I told him there's already one, Bitcoin. There you go. People are just starting to kind of figure this out themselves. Nice one. I'm designing a tinfoil hats on Tuesdays, says Michael John Scott. Maybe drop down to a 50-minute time frame. Cool, no problem. Good idea. We didn't actually check in with my idea from earlier on, did we? Again, we didn't break it. We're up above our previous highs. What have we got there? That classic W. Not quite, not yet. We did smash Eve's head in though and drink her brain juice, which is what we talked about, but we haven't actually gouged out Adam's eyeballs yet. Really, until we create Adam, until we zombify Adam over there, it doesn't matter that we've kicked Eve's head in and left her for dead at the side of the road. We still have to look down towards Eve's feet here and see if her sort of central nervous system stops responding and she stops twitching her legs and everything else at that point, and then we can move on the way. Currently we're doing all right though, and everything is the parabolic SAR is just flipped, you can see in terms of this time frame. So yeah, we're still looking at this to see if it pans out. The Adam and Eve aspect hasn't. The this aspect is a little bit rich, to be honest. 30-minute time frame Just sort of slot it in a little bit easier there. It doesn't really work, to be honest with you. Kind of sort of, that's like a test and then a retest. If we do break out of this now, then groovy, that's all good. If we don't, then we don't. I don't really care to chart this too much in the 15-minute time frame, but I have recently done it and kind of left people with little nuggets that they can use in their trading, so I suppose I might as well again. Yeah, just look for volume. I'm going to let volume be the one that gives you the confirmation on this one. And we don't have it right now, so just look for volume. Okay, continuing on with that. Nice one. Zoner says, mind blown. I hope it's blown for some good reason. Did you look at DOT? I didn't look at DOT, Kevin. Right, we could do that maybe for I'll do it for like less than 2 minutes though at the very end, just because I'm interested. DOT, having obviously lined your pockets with gold recently, I'm sure you're super happy with that. In fact, I remember talking to people in Discord about it, you know, going up above and down below $5 and all the rest of it in the summertime, and here we are at 10. Scrolling back up the way then for everybody, 3000 Trin, thank you so much for joining me. Michael John Scott, thank you so much for joining me. Known as John by his friends, we're his friends, so that's why we call him John. The Mexican Kitchen, thank you Jamie, my brother from another mother, he said earlier on, which is cool. Then Zoner was saying, what coincidence, how convenient. I happen to run a tinfoil business. That's so good. You can make all the hats you want. It is super convenient. Scrolling back up the way, we had various other people chatting in there, so I don't want to miss them. Such as, now it is actually hard to find people because we've had a good bit of chat. Oh, we've had Demo in there. We've had Nav and Ethan. Oh, always good for a shout out, Nav and Ethan. This is cool. I saw you saying goodnight to K-Doc there at that point. So we had K-Doc as well earlier on. Hope he has a good night. See, he's putting in some laughing faces, so at least we brought a smile to his face. That's good. All the wrap stuff on ETH is centralized too. Lol. Interesting perspective from Nav and Ethan. You're right. You're obviously consigning your money away off to some particular smart contract somewhere, and who's to know how they would work. I'm down for Zill also said 3000 Trin earlier on. That must have been when we were looking at it, I suppose. Scrolling on up the way, who else did we have? Who let the bulls out? Whoop. It's good to have you back here, by the way, buddy. Haha, the pool analogy got me tickled. Also here for the TA, but stay for the yolks. Good one. Nice one. Then we had something. We also had 100 Boy, and I think 100 Boy deserves an extra big shout out as well. So I'm just going to actually give him one on the screen. Thanks for becoming a channel member, 100 Boy. Which is cool. So I'm just giving him give that to him as a shout out. Trading within the range here, by the way, easier than trading with outside the range unless you're looking for other things. Let volume lead the way, like I said earlier on. We also had Leon earlier on. He didn't speak again after I said he'd said 2 negative things. That's a shame. Hope you come back and give us another shot. We had Johnny Smith as well, which is good, and that's everybody that fits onto my screen, other than the last but not least, Tony Wright, a guy who I think is an absolute star. I really got a lot of time for my friend Tony Wright there as well. Okay, so wait, what did I say? I'll do a couple of minutes for K King. Oh, St. Malcolm Calvez, good to have you here as well. Came late but still on time, man. Nice one, excellent. Thanks so much for tuning in. I'm not quite finished just this second. I've had that song by Robin stuck in my head as well since earlier on. Do every heartbeat. As I read Michael John's comment, it just brought it right back. Anyway, so did we look at DOT? We didn't look at DOT, but we're just going to do it for 2 seconds here on the what do you call this? The denouement of the show. Not too dissimilar to what we were seeing there in terms of Bitcoin, in the sense that this is consolidating here on the 15-minute time frame. Whoops. And we have potential for a measured move really anywhere in this area. Let's just say that roughly, if you look at the top, it's in about 970. Look down towards the bottom, it's in about $8.90, so we're talking about 80-cent potential move. If we broke out of that towards the top side, that would take us up towards $10.20, which would be nice. And nice, not enough to break structure, but enough certainly to give us certainly a very good leg up the way. Did I say that wrong? 10.20? No, it'd be about that, wouldn't it? So that's cool as well in terms of what we're looking at. There's no volume right now to say that we're breaking out of anything. Like Bitcoin's probably most likely to sink back down within the structure of that triangle over the period of the next 15 minutes, but here we have it. We do have big wicks everywhere though on this one. We've also got this way longer trend, which is like much more rigid when I take that line and just borrow it and go back the way. And as you can see, we haven't broken that yet, so we kind of want to maintain not breaking that. Of course, you could change the angle of this thing, but this is one of these parabolic move things. We never want to see it happen. What does happen when stuff like this kind of gets broken a little bit in terms of a longer term trend line? Well, we've seen things like it in the past. For instance, over here, and now I really do need to hide a couple of these extra things on Chainlink as we look at this movement up here, ding, 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 cutting all those bottoms. We broke it there and we didn't break the structure on their way back up again and sank down some more. In fact, ultimately going from 1190 down towards 880, bringing another 30% off the prices there with that sort of a move. So, you know, ideally we don't want to go through a process that's anything like that on DOT currently with this move up the way, and instead we'd persist and keep on moving. Putting it on log might give us like a little bit more of a feeling like that's more organic looking, perhaps, you know, not massively, but there you go, whatever. If we don't take out this area on the right, then it starts to look like there could be a head and shoulders, so that would be crap. So failure to get a decent measured move off the back of that, any consolidation that happens now, and failure to take out 947 could see the prices go from down to 847 again, you know, so that could put in a bit of a risk in this area for us if we don't see that was meant to be a question mark, looks like an ear, if we don't see that decent measured move coming for us. You know, if we do move towards the downside, then of course as well you're looking down towards, where's the lower end of this thing, about 920, so you're looking down to about 840 or so. Structurally wise, you're doing okay so long as we stay above 820 overall, and that's good. Parabolic SAR has you wanting to short it here on the 4-hour time frame. On the 24-hour time frame, obviously you're very much massively in a long, staying above all of these other areas here in the past. I need to tune out in a second here. I'm sort of suffering. Staying above all these areas here, very much important for us. I've got the COVID whinge. God, it's been so good. You can even go as far back as their all-time lows down there at $2 in terms of this chart here anyway, up towards our highs, and find that, you know, so long as we're above 850 like we're kind of getting at, then we're doing all right. If we do go below that, then 726, you know, that would be your next area to be looking to. In terms of where we should look to for now as well, I've seen people in the recent past, I discussed it slightly just for the crack during this episode. I've seen people such as my friend Magic Internet Money, who has a nice YouTube channel, and I think the guy is really nice, so you can absolutely go ahead and check him out, talking recently about, you know, finding the Fibonacci that you're supposed to use and whatever else, and a good part of that kind of draws down to experience, but it's no real surprise for people when you see that I took it from that high down to that low, and this within the scope of this range here, consolidation phase, didn't mean that I wanted to use any of these in terms of looking towards the top side targets, and that's what we've got. 1618 came in at our last inflection point then for extension up here at 7.127. We've made it through the twos quite nicely and come up and touched off the 3618 there, you know, staying above the 2618 here, that comes at 875, but we've already talked about 850's importance or whatever is key, all that stuff. But the next targets that we're looking to on this coin are 1140 up towards $12.30. That 90-cent range up above would be a profit taking one for the next one to look out for. Really, you know, starting off at 1140, finishing off at 1220. If we can stay above these ranges right now, all the chat happens to fit in perfectly, really, more or less, with the structure of those Fibonacci extension points, and that is as a result of being in this upward parabolic move. If we break that, there is a danger, a real danger, that the prices could go as low as I'm only saying this for demonstration purposes, as low as $2. However, that is not... why did I need to work that out? Right, it's time for me to go. I just had to use a ruler to work out the difference of 80% off of $10. I mean, what kind of mad person does that? You bought DOT when it was still the old DOT. Yeah, I didn't, or did I? I don't think I did. I didn't. Certainly had the YouTube channel going though, and we were all chatting about it back then. I mean, I had this arrow over here for a reason as well. Can't remember what that would be, but as we can see, when this candle took out this area of clear support, it was this massive wadoosh candle. You know, it gave us that opportunity to rebuy it. Whatever. I've done it. I've done it. One last comment then, and this is it. Homework for everybody, as given to us by John. And to answer Zoner, yes, we are. We are all in an episode of the X Files, and we are. Rocky and Trace went homework. Please watch Christine Lagarde's 2014 Magic Number 7 speech and tell me it's not an important signal. Many versions on YouTube. She's now she's ECB head. Right, so it's something which is interesting, and that's some good homework. Thanks very much. We're all in early, says 3000 Trin. You're right. Great TA, says TradeSpot, and thank you so much. Thank you to everybody for joining in. And yeah, watch it and then comment. I'm interested in this. It sounds it's the Matrix. It sounds interesting, right? It sounds interesting regardless of what anybody thinks about numbers personally or whatever, and that, you know, some people are religious about them, some people not so much. It's definitely interesting, and I'll check it out. Thanks for sharing. Like, even if it's just enjoyable. Besides, you've got to respect the likes of old Christine out there. Much love to you all. I'll be back again for a live stream on Wednesday. Tomorrow I'll be taking some time to make some videos that I can put on Discord, and I will intend on publishing a static one on YouTube for everybody to watch at their watching pleasure, if that's their leisure. And I'll see you all again then. Thank you very much. Until next time. Ciao.